All right, so yeah, make sure we get that in there. So we again got to archive this stuff, right? Just in case you guys want to come back behind it at some point. All right, so okay, is it sharing? Oh yeah, I forgot I have it sharing on the extra screen as opposed to, let's see here. Okay, there we go. Let's spy it. There we go. All right. All right, then, fellas. So again, like I was saying, so this is the cyclical nature of how markets are, trying to factor in, a sector or industry that will now come into some kind of form of what, excess business, right? Or this might be their year when they do a lot of their shipping, right? So on an earnings cycle perspective, you say, well, if that's falling in scheduling around October, November, we're talking about coming out of the end of Q3, somewhat going into the Q4. So that earnings report will be significant to that of what, all right, what earnings cycle falls between August, end of July, August to October, right? Anybody? What earnings cycle falls between
quad witching?
So no, it falls like earnings cycle. Like, we got the 4 quarters, right? 4 quarters out of the fiscal calendar.
That's Q3.
Q3, exactly, right? That'll be Q3. So Q3 earnings cycle falls in that kind of sweet spot of where, again, people just came back from kids going back to school, basically, whatever. You had that kind of value where people are setting up for the holiday shopping blitz, whatever. And so rightfully so, of course, you got shipping containers, how they move goods and services as well, right? Through that bulk aspect to kind of load up these stores, get them, well founded in the warehouse with items that they need to deal with a holiday shopping cycle. So it's that kind of understanding. Y'all with me there? Is it making sense a little bit? It's a part of, the earnings cycle, right? Our earnings cycle, right? Right. They would call it like a cyclical nature of how, some things do better than others, right? So if you think about amusement parks, right? These pure play amusement companies, right? Like a Six Flags, right? Or SeaWorld, right? Disney kind of a little bit of both, but it's not 100% pure play. A pure play would be Six Flags or a SeaWorld, right? Because that's all they do, right? They ain't pumping out no movies. They ain't pumping out nothing. They just like, hey, come show up at our, locations and, ride our rides, enjoy whatever, right? Theme parks, whatever. And typically, if they're not in, warmer climatic environments where they can have year-round access, then they're going to be working on on a cyclical nature, right? Obviously, right? Because they need warmer months. That's when most people are moving around, people out of school, possibly for the summertime, kids are going to these theme parks, et cetera, et cetera. So the bulk of their revenue is coming through that cycle, right? That time frame on the schedule where this is where they're going to make the bulk of their revenue, or they should. So if summer months, kids are hitting up Six Flags, whatever, or possibly spring break if some of them open if they're in a good climate, but definitely the summer, right? That's going to happen between the months of typically around May to July, right? So that earning cycle, that aspect of revenue, because markets always in a lag, right? Markets obviously they lag in perpetuity. Why? Because that's what it is. It's like, kind of like how rent, right? You got a lag in your rent, right? Well, you pay it forward, but it's still, they know that, you still owe it, after you've lived the month, you still got that lag in payment. Well, that's how the markets are setting up for some of these cyclical plays in that regard. So when you start looking at earnings, not just earnings in general, but just these companies, in essence, when you're trying to figure out when is there's, as Dan Ives would say, their super cycle, right? Their moment where they're making the bulk of their revenue for the year, you can somewhat, backtrack it or back test it, quote unquote, to moments where this is when they're doing their best business, right? Because this stuff ain't rocket science. I know I'm kind of like, well, yeah, where you going with this, brother? It's to get you in the mind frame of thinking about how a lot of these companies are producing, certain aspects of their revenue. And by the way of them being able to kind of also speak to it through their guidance, because the whole point is of guidance to give you what a frame of reference of what they will look like going forward. Now that we amass this, amount of information or this revenue, right? We hit this goal, or we did meet this goal. This is what we got to do going forward, right? That's just a part of the business model that they're playing for. That has nothing to do with all the other issues that may be coming down the pipeline that's outside of their control. Again, inflation, right? The elephant in the room. I always go straight to it, right? Inflation or supply chain issues. If they're a company that depends on, again, a shipping container company being able to get their goods and services to them, right? As you see, it all ties and connects, right? That's the market. But it's relevant. Why? Because you're trying to figure out as an investor, again, also not that you're trying to time cyclical moments in markets, but I'm using the earnings conversation as a case study, because sometimes you can also get a feel on when certain companies will do certain things based upon the bulk of how they do or conduct their businesses. Again, it's not it's not something that you guys don't know. You probably even couldn't even fathom or even understand if you just a consumer only, because the same way they'll do delayed drops and ships for certain items, right? Or they'll pace it out. Case in point, I know Open Chris, he definitely in the shoe game, so he knows throughout a 12-month scheduling on the calendar, Nike has already kind of pre-programmed. They ain't doing impromptu drops unless they just feel like they want to do something like that. But they're doing pre-programmed shoe drops, right? So there are indeed.
Yep, you're right.
Mm-hmm. So like their marketing people, whoever they R&D, research development, whoever their promotion people, they put together their schedule almost a year in advance, right? 6 months to a year in advance, possibly, I would think, right? And a lot of it could be, consumer surveys, like seeing what the people may want, whatever, or a lot of it just already on timeline because they've already put ahead of time, like 12 months, 6 months, maybe 2 years. One thing is certain, we know that they're going to them shoes are going to move, right? There's a market for it, right? So it's another way of using that intel to now further put together, again, a somewhat of an investment thesis surrounding that. And that's not the sole thing only, but it also aids in giving you information or critical information or usable, actionable intel that you can use to make a better, more convicted, thesis in terms of why you would want to invest in the company at certain points. Of course, and that's the technical, fundamental side. But again, the technicals will give you that it will give you that window of opportunity. Why? Because you're still under the guise that you want to always buy low and sell high. You want that discount, right? You want that discount, right? Who wouldn't? All right. So we'll look at a company like this case in point, right? We'll look at Snapchat, right? Snapchat had earnings tonight, right? And we kind of had a pre-conversation about this. I was on earlier doing a live stream, just talking about earnings in general and just, markets, whatever. The importance of that in terms of Snapchat being in a very peculiar situation, right? A very precarious situation too. But for the most part, they were, let me see, is it sharing? Is it not sharing Snapchat? Oh, it should be showing. Oh, it's showing, okay. They were in a position where they were already kind of kind of left for dead, right? You're talking about a stock that benefited greatly because of the COVID boom, because people are home, people are, kids, all the tweenagers, right? Those between the age of teenage years to mid-20s, right? They call them tweenagers, right? You see that stuff and you say to yourself, okay, well, right, these people were highly, engaged in these platforms at a time when there was nothing else, that they could do because there was quarantine. They couldn't go out. They couldn't socialize with their friends. So these became the platforms that people utilize to kind of keep that connection. All right, granted. Now, okay, let's do this here. When we think about it from a cyclical perspective, again, we're just using that term. We're going to keep using that term, earnings perception. We're talking about, going back to the COVID lows. COVID lows had Snapchat at around $7 a share. 7, right? $7 a share, right? After that, well, we figured out that, it was obvious that the Federal Reserve had the markets back. They was going to start pumping all this money into it to backstop the markets, to keep assets, from, imploding, right? As, the rest of the world kind of imploded on itself for other reasons because of short, small businesses closed down, et cetera, et cetera. The one thing that they were more conscious about protecting above all things were assets, right? Bonds, but the bond market, and then definitely certain assets, right? When I say certain assets, meaning the overall marketplace in general, right? Because a lot of those things are what they're invested in through mutual funds, pension plans, again, you name it, 401ks, Roths, drips, the whole nine, right? The whole nine, right? And so that's people retirement, essentially, right? Outside of a Social Security government side, there's also the equity assets that are, given or people having the right to utilize that service as well to build up their nest egg even more, right? So there's a vested interest to keep these assets from plummeting, essentially, right? Well, that was the case then because of COVID. It was a cyclical moment out of necessity where the Fed saw need to add money, a lot of money to it. And so regardless at that moment, the ideal of their company earnings, whether it mattered or didn't matter, they were still going to benefit from cheaper interest rates so they could borrow against, their bonds, convertible notes, whatever, to be able to sustain themselves throughout this crisis that we were in, right? So again, it's just a lot of things that you see in play that are already set up to protect these companies, through hell or high water above, the average everyday Main Street person, mom and pop. You have to sink or swim in the real world. If you're an asset owner, you do have ability to if things get tough or get rough, you can feed off the companies that you invested in. Why? Because they're there to kind of play the role of the bridge over the water, right? They provide you some kind of level of comfort when a lot of other things may kind of fall to the wayside, like employment. If you again, something happened, you get hurt, whatever, on the job, whatever, you still got assets that you can kind of somewhat, float stuff through. All right. So again, it's all relevant. Why? Because when we're thinking about investing in markets and everybody's trying to figure out when is a good time to get started. And if you're kind of like doing your research ahead of time, which we're supposed to be doing, a lot of times, these earning cycles will give you a really good window in terms of what's really happening in around marketplaces. Now, we know that there's, again, other aspects of information. What's going on? Ilba Marquiston came in the building as well. Shout out to you guys. Shout out Family Peace, Power, and Profit. All right.
Peace, power, and profit, you guys.
Peace, power, profit.
Peace to the family. Peace to the family. All right. So these earning cycles will give you some kind of a window in terms of where markets are. And a lot of it will be scaled based upon the best in breed, ballers out there, right? We say the best in breed ballers because they're the ones that continuously gain all this market access, right? Again, these big tech companies, right? The growth stock, so to speak, right? Now we do know that the growth stocks now are starting to kind of go through that, major level of volatility and fluctuations right now. Why? Because we realized that the whole ideal of the cheap money of the Federal Reserve printing is getting ready to come to an end at some point, right? It's getting ready to subside. So these earning cycles that are falling in tandem to that, event that's getting ready to happen, this is kind of what they call an all or nothing, crapshoot now, right? It's an all or nothing crapshoot. Why? Because where we say fundamentals matter, right? We would say, fundamentals matter, they do. Well, at some point, these companies are going to have to be able to stand on their own. And if their earnings cycle, cyclical nature of the earnings cycle shows that they have their best earnings during certain times of the year, let's say a Q3 or Q4, especially if you're retail, obviously, holiday shopping season. When you hit that dry period, right? The dry period typically for most companies that's in, the market is typically around Q1. Why? Because that's when everybody's restructuring. They starting to plan ahead for the next 3 quarters that's coming to prepare for the back end. Most people are more reluctant to spend money, right? Because it's holiday season, right? So they typically go through what they call the crackhead season, right? That Q1. And in this case, it's going to happen right around the same time the Fed start tapering and also the potential value of raising rates. You guys with me so far? Is you see how we connecting the dots a little bit here, right? You guys with me? Is it connecting with you a little bit?
Yes.
Yes, sir.
Yes.
Yes.
Yes, sir.
Because this is going to be the season where now markets going to have to again stand on their own. They won't be able to get the luxury of, maybe we come in somewhat slightly, not on it too much. The market just will still kind of prop us and reward us. Why? Because it doesn't have that, that extra layer of protection or moat value of the Federal Reserve money that will be there to make Wall Street feel comfortable if they don't, come to aid to these companies. Well, at least a lot of money that's already in assets will be enough to kind of hold these and prop these stocks up, right? They're going to have to sink or swim at some point, right? The fundamentals will have to matter again. And it's starting to show a little bit now with this particular earnings cycle, because we're seeing that now. Case in point, what happened to Facebook. And so we kind of talked about that earlier today when I was on the live about, the difference between Snapchat and Facebook, right? Of course, you would say inevitably, that Snapchat should plummet because Facebook plummeted. All right. Because Facebook is a bigger company than social media. But again, you also got to, say to yourself, okay, well, do Snapchat have the same ancillary costs that Facebook has to run its business? Does it have all that extra overhead that Facebook has as well, right? Does it have that extra layer of, stress value that's baked into their their future revenue value, because they're going to deal with all these what ifs in terms of Congress come after them and lawsuits to set and third, right? They're just purely running their business model as it being, we're just a social site. We have a couple of extra items that we can offer in terms of ad revenue. In this case, they got this augmented reality glass, whatever. So, and we don't deal with a whole lot of Congress issues like these other, big tech companies do. They just focus on their business model, right? Now, the one thing that they're definitely, subjected to is that of how they parse their revenue through being able to kind of, have access to a lot of different new clients. It's by going on these operating systems, right? Or these platforms like Apple iOS, right? Or Android, whatever, right? More people to download their app, so to speak, quote unquote. And Apple is being kind of the benchmark, shakedown kids on the block, right? That hits everybody across the head that want to publish through them, so to speak. They're charging 30%, close to 25 to 30% of the ad revenue that these companies are getting, just to get people to sign up through them. If you strip that away, from a lot of these companies, they're like, okay, they have to really perform to be able to benefit, and keeping, their investors feeling like, okay, we still have a good growth story void that we get shook down by Apple, but it's not enough to hurt us, right? So we can't, mess around with any other kind of, R&D or problems that may take revenue away from the company. If we're already kind of, stressing the little bit that we already can get, right? That we're already earning right now, right? And then the whole idea of the cycles, all that stuff matters in terms of timing, etc., whatever. But in this case, it was purely a magical moment. I was looking at the chart here of a technical story and a fundamental story coming together here. Why? Because Snapchat offered up nothing else, a very compelling technical bounce, right, into their earnings, because it was highly oversold, right? Highly oversold, right? This is the bigger picture chart, of course, but you see clearly here, right? I'm just going back to that gap, right? They had a gap fill at $28. They went under that an additional 4 points and kind of, trailed that around about $24 a share. And that's after being up here at 80 some odd dollars a share, $82, $83 a share. So if nothing else, you would say, well, on a support level, well, the stock can either break down and go lower, from aspect of, the stock being highly oversold. Of course, you see all this pink down here, that means it's oversold below 30 on the RSI. Of course, it was highly oversold. And it was coming off the back end of a holiday season too. Now, you're talking about a social media site, right? So on a cyclical nature, right? On a cyclical nature, what are people doing the holiday season? right? Now we're still dealing with COVID too, to a degree, but most people still what home. Like these young kids, they're home more than they're what at school because of the holidays, right? So they get a chance to now, whatever, get back on social media, whatever, order the little trinkets that these companies offer, whatever the case like that. And it's very, it's scale in essence to be able to, meet the demand of what their consumers may, or what they feel like the consumers will benefit from during a time of that cycle, right? So not far-fetched to see that them, being able to say, well, we can probably get a nice extra little bang or boost of revenue out of this, Q4 cycle, because, we got holiday shopping blitz, we got kids at home because of the holidays, more so than being at school. You got winter months where people, whatever. It kind of makes sense, right? On a economic level, how you would see a company like this would benefit from that. Now, again, we're doing apples and oranges, right? Facebook to that of Snapchat. Again, do Snapchat have the same overhead than that of Facebook? Anybody? I'm asking the question, I guess. Do they have the same overhead as the Facebook do?
No.
Right. So clearly not, right? and you actually say, okay, so they have less liabilities at the end of the day in terms of how they need to perform or pressure. Let me use that way. They have less pressure, right? Because they fall within a window, right? A cycle that could be easily benefiting them during this time, right? And the chart just happened to be what? In a very oversold manner. So you get what they call, again, the tea leaves are what? And the stars are aligning here. Does it make sense a little bit? Is it making sense a little bit, guys? Where you get an oversold technical perspective, married with that, coupled that with a fundamental compelling story where they've already had a lot of outflow, not just in the stock, stock price itself, but again, a reckoning of, them having to kind of refine their business model from the previous couple earnings, where the stock, you kind of hit a heyday, they kind of set their guidance. They got, to a point where they thought they can kind of maintain at a high proficient level. Again, this was all during the time when the market was just going up because of what? Accommodate a Fed, right? The tech sector, go along, get along game, right? Just if you in this sector alone, you benefit because why? The broader market is favoring this industry over most, right? Because they feel like most people are accessing these assets, right? Or these, these industries, right? So you can kind of, again, walk your way through a lot of this stuff mentally without even going into the filings, right? The earnings reports, of course you want to do that. That's a whole portion of this, but I'm just saying on natural observation, you can think your way through a business model and you can somewhat make it make sense, right? Dollars and cents, right? Before you go, go into the depth of it, right? Go through the actual paperwork, this, that, and the third, right? So that's how you also formulate your thesis. That's how you also look at the markets and be like, okay, I see what's going on here, right? Well, I know this, this item don't, it only grows one time of the year. So this is their season, right? This is their pecan season, right? Or their watermelon season, right? In the South, right? Not rocket science, right? Not rocket science. And you'll formulate, again, a game plan surrounding that because of, X, Y, X, Y, Z, whatever, right? So that's the ideal of, again, using earnings, an earnings cycle, planning ahead to get ahead. Why? Because now you say to yourself, well, okay, Facebook just got cut, down, they 37% close to it, right? 27%. And they were riding cloud nine, right? A more less, a lesser of the sector in terms of a Snapchat or a Pinterest, right? They have a more of a niche market, less overhead, less liability. Their target audience value will be, more centric to knowing what they actually can potentially produce in terms of revenue, because their guidance is already fine line anyway, because they know they're only working with a certain window of people that they can pool revenue from, right? And they monthly active users, daily active users. It's just part of their cycle, and it goes right into what we're saying. They just happen to be in a situation where their charts were more in alignment with them being able to benefit from a Q4 earnings cycle where people were home for the holidays, utilizing these platforms, whatever, right? Even, with COVID, all that, but just still, this is their cycle, right? The same way we talked about the shipping companies. So you'll be able to, again, look at these industries in the same likeness, formulate opportunities around their boom season, right? That's what we look at, like boom and bust cycles. That would be a boom cycle for them, right? The same way you would take that same approach to them going into a spring to a summer cycle. Why? Because kids get ready to be out of school. So guess what? They back on social media more so than none, right? They trying the latest gadgets that these companies may have, R&D and produce during that time frame. Test driving it before they go back to school in the fall, and then at some point during the holiday season on the back end of the year, October, November, December, that's when they looking to upgrade or see if the company came out with anything else. Hence, that's why Apple always seems to drop a phone during what time of the year? When do Apple typically drop their phones? Anybody? What season of the year?
Fourth
On the
quarter.
fiscal calendar.
Winter season.
Fourth quarter.
Winter.
So around fourth quarter,
North-
fourth quarter,
Yeah,
or
like
third.
fourth quarter, Christmas time.
September, October.
Only between fall and winter.
Yeah.
Right. So between fall and third. So we'll say Q3, Q4 cycle, right? Because that's when, they trying to plan ahead for Black Friday sale. They trying to plan for the Christmas sales. They trying to, right? So they're going to have those phones somewhat, produced, landed, and, skewed and waiting to come and hit the shelves around that, mid-October, November, especially going into December time. Make sense? So the bulk of that revenue, though, that Apple will make off of that cycle of selling, it only is going to be relevant during what cycle, though? What earning cycle? When would that money become relevant, though? Like, would it be Q1, Q2, Q3, Q4? When would that revenue be relevant when they drop their phones during those certain cycles?
Q1.
Whatever this cycle is, this is the Q4 or Q1.
Q1.
The next
Right.
cycle following it.
The very next cycle following, right? So
Yeah,
essentially,
January.
Right.
So if they drop it in, let's say mid-October, whatever, that's still kind of Q3 going into Q4, right? Into September, I guess you say that. So it'll, the bulk of that revenue would kind of show itself during the Q4 earnings cycle, right? Of course, like we're dealing with right now, right? And that's you planning ahead based upon whether or not they have any hiccups with the supply chain, any issues with the phones. They still have a semiconductor problem with the chips. Y'all follow me there? You're mapping out all of their all the liabilities, whether or not they're pros and cons in terms of how they'll be able to meet or exceed their goals, right? That was previously given through their previous earnings report, their previous guidance. Make sense? Is it making sense a little bit, guys? This is a part of that, right? Using earning cycles to plan ahead, to get ahead. And these could be binary events if you choose to play them that way. Or again, if you are a person who's stacking your chips through your investment because you like these companies for this aspect of growth, this, that, and the third, guess what? These are moments where you say, well, okay, if this is going to be their cycle to get it, are they strong? One of their strongest, seasons to make money. If they fail in this moment, they fail to meet that goal, right? If it ain't nothing, let's say, too critical, those become somewhat, okay, that's a one-off event, right? Because that's a strength where they make the most of their money. So most people feel compelled to do what at that moment? Buy the dip or just let the company kind of sit to the sideline, right? Most times they'll try to buy the dip, in essence, because they feel like this is a moment where they really show strength, and this is just a one-off event. And I'm saying that because, again, what we saw in Facebook today was no more than just the same thing we saw that we witnessed in Netflix, right? Of course, Netflix was, Netflix was more egregious the way that it dropped. Of course, make no mistake about it, Facebook drop was somewhat the same value in a lot of ways, because even if you think about it from, matter of fact, let me do this here. You think about it from the, all right, come on, I got all this stuff on the screen here. Move stuff out of the way. Oh yeah, Facebook. If you look at the chart again the same way, right? it had basically crest up here around 390. It launched from the same area that it dropped below, which is roughly around this 250, support point. Okay, that went back, maybe around what, Q1 of 2021. Right? You notice how the stock bottomed out around Q1 2021 right here? Are y'all seeing this here? This kind of rounded bottom here. See right there, February, right? Obviously, you see that with the two. Then March right there, right? So that means in that moment, that's their what? That's their week. That was their week moment.
Mhm.
What's happening right now with Facebook stock right here? Beyond it just got cut, cut down real bad, right? It's going right into that same cycle. You see what I'm saying? It's going right into that same cycle, that Q1 cycle value where, okay, well, in this case, they just got a big reset button. Now, what makes this one different the most is because we know we're going into a tightening cycle from the Feds as well, right? So monetary policies are getting ready to kind of adversely affect some of these high fly growth stocks that have benefited off cheap money because they borrowed at low interest rates. They were able to buy back their stock, their shares of their stock. They was able to R&D better with that loose change because they didn't tax them as much on a higher interest rate. They were able to get a lot of stuff done if they were fiduciary responsible. Now you take a company like Facebook, of course, the bulk of their ad, their revenue comes through they ad, right? Ad revenue, right? Kind of like how Google does with YouTube, this, that, and the third. But they're also now moving into a place of a hard physical product that they're going to offer through their ancillary service in terms of this metaverse, by you having to buy the Oculus glasses, right? You're going to have to spend on stuff like that, right? So it's going to be product and service, because that's how you somewhat sustain yourself as a big tech company. You got to have a product and also be able to sometimes offer a service, unless you just have an awesome service, right? Like a Google, right? Because everybody uses their platform, right? So in this case, they're trying to reinvent themselves. I'm just using them as a case study, the same way I'm just talking about how Snapchat, the same way we talked about, Pinterest being a niche market, but they have a certain, echelon of clientele that you can look at and say, well, if these people spend better than the average person in this sector, whatever, you kind of make a case for why they guide the way they do and they benefit during certain cycles, certain seasons, right? And when most cases, when you have the perfect setup, what is the perfect setup? Where the chart is giving you a highly, highly oversold perspective, and you in a strong earnings cycle where at least you can benefit from. And forbid you get you have low estimates going into the earnings print too, right? That makes the bar that much more lower that you have to exceed or beat it. Like you literally got to just do something crazy not to hit your numbers, right? In certain cases, because Wall Street's already kind of giving you that kind of they're giving you that layup, right? They're providing you with that layup, right? So again, now Facebook is back to some of those same areas that we were, as you see here, right? As you see here, clearly around around the fall, right? In this case, the fall of 2020, 2020 essentially, right? Or, not fall, excuse me, summertime of 2021, leading into the fall, I should say. But that's still around, in this case, coming out of Q1, going into Q2, right? Can't count it because COVID load, that was a whole different one-off event, Black Swan event. But it definitely consolidated a lot around that area here around, May, June, July. And then it broke out from there. So now you right back to that same area almost, right? Today, I think, what was the low today on Facebook? I think we had a low of, what did we get? Let me see. Let me get over here so I can, let me just do it this way. Right. We had a low of 235. So 235, right? So 235, last time Facebook was at 235 was, again, we're talking about at around this point here. Yeah, at around this point here. So we're talking June, July area of 2020. So a big reset, so a big flush, right? Big flush reset button in that regard, where, again, you brought the market all the way back down to this point here. Now, the one thing you would ask yourself, okay, going into a tightening cycle, does that put more pressure on Facebook? Clearly it does, right? And inflation is, again, something that's hard for people to kind of measure in terms of how they look at these companies in terms of a growth perspective. Why? Because ultimately, how many people will struggle to pay for pay for Facebook ad revenue to still promote their businesses? They're not that expensive in that regard. Now, they do have some bigger corporate companies that use their services as well, right? If they choose to scale back because this, that, and the third. But for the most part, you would see Facebook in a scenario where they'll have to lower their they'll be lowering their guidance value a little bit here to kind of equate that of all the risks that are kind of set in motion ahead of them before they kind of get to that point of dealing with rate hikes and again tight money from quantitative easing side of things where they can they'll have to go out there and basically produce organic growth, right? So on an attractive level in terms of an investor, you say, okay, well, this is a cycle, an earnings cycle that is a what they call this is a freebie, this is a given, right? This kind of looks like the COVID drop. I mean, you think about it, it didn't happen as fast and rapid as it did here, but it fell literally from September of this year, or last year, excuse me, September of last year, it peaked. And now, you peaked at, roughly up here near 390, whatever. Now you're all the way down to here to 240. And let's say, even if you come back and test that flat line value of, let's say 200 just on GP, right? But if not, it looks more so like 220, right? Just on that point, you still have a good cushion, a window that you can think about investing in this company. And knowing that if you start principal-based investing, you can play within that $20 plus window or $30 plus window, right? And at some point you will say to yourself, okay, Facebook should, it should get their affairs together, right? As they say, get your mess together, right? They'll get their mess together. And that may offer up a great attractive investment value to deal with this, weakness that you're going to come through in terms of this, economic cycle, right? Because this is the economic cycle drawdown as well, because the Feds are removing money away from the markets. So it's going to be scarce. It won't be as lucrative as it was before, but you do know these bigger companies that have bigger balance sheets and bigger cash flows on hand, they'll be able to weather more, organic growth storm than that of a lot of their peers, right? So that's why they're getting taken to the woodshed early now, because they benefited, when the gravy was good, obviously, right? Again, Facebook went from 130 or basically 127 up to 386. Like, make that make sense, right? You're talking, multiple 100%, gain from the COVID lows. And that still puts this company back at a point of gaining an equal footing or equal weight value around about $200 a share, roughly between 210, 220, 200, that box window there of what they call fair value. It's hard to think about it that way, right? But that puts them right around that point of the COVID situation before COVID happened, literally around 218, 220. Couldn't make this stuff up, right? Well, you won't feel bad about it if you say, I'm looking to start my position here because this cycle has presented me a great opportunity, then so be it. Are y'all with me there? Is it making sense a little bit? This is case study now. This is not investment advice saying go buy Facebook.
Yep.
But y'all know how we do it in training. We're using this to make the, I invest. Go ahead, Open.
The fair value, I definitely agree with that. And then you also got to think of it too. What we like to talk about as well is where was your entry at? If you've been in Facebook for a while and you in the 100s or earlier or whatever the case is, then you still up. You can kind of you can still kind of buy in and trickle in here and there. Even if it do get down to 200, you can start to average yourself in, as it, works itself in, or, even if it drops a little bit more or whatever the case is. But, if you in early, you still should be good.
Totally agree with that. That kind of puts you in that kill box. So when we, again, align the stars in this perspective here, you got obviously a various 30, moving average here that has respected, Facebook's ability to grow and pinged off of before the COVID lows happened, because COVID, that was a one-off event. That's why I broke below it. But everything before that was trending, well above it, right? So again, y'all know one of our favorite sayings where we say this up till we blue in the face. Moving averages act like what? What do moving averages act like?
Magnets.
They act like magnets. The further you get away from that moving average, especially a benchmark one like a VWAP, especially, the more it's going to pull on that stock to get back to what, to a fair value moving average, or, a trailing aspect of what the money and the growth should be in alignment with one another. Of course, we use the benchmark 200-day moving average and the 50-day moving average as well, right? But definitely VWAP, because volume weighted average price is all in the name. Volume weighted average price. It need to be trending at or around that price. Notice that the VWAP on this scenario here puts this stock literally around what, as you see there, right? Let me get to, right? Literally at around about what, 224, 225. So roughly say 220, right? Give or take a couple dollars here and there. That's on a what, on a, again, a solid, growth state value of if Facebook just kind of stayed the course it was going, void of COVID, it still puts it around that price. Now we know it'll probably be higher than that because you still got to price in what they call a future valuation, because they had the ability to grow, they had the ability to execute, hit their goals. That's how Facebook get rewarded, right? They get rewarded by goals. Oh, somebody, over Jeremy. Sorry. I got you. My bad. Right. So that puts them in a position to kind of get that extra, right? That's when you get what's called, you get your extra, right? They go on and hit you off early, they pay you early, pay you in advance, right? Cash in advance, right? And that's a good thing, right? That's a good thing for some of these companies in that regard, because again, we're talking about pricing in future, future growth, right? It's all about future growth, right? You want to be rewarded with that cash in advance because you can R&D with it. You can, do things with it. Some people buy back their shares, y'all get it, et cetera, et cetera, et cetera. Right. So again, it's a lot that goes along, within that, but you're just trying to get in the mindset of what? Thinking like a lot of these fund managers, right? Like an economist would do when they're planning in advance, right? As an investor, you don't have the luxury to play what? Checkers. I repeat, as an investor, you do not have the luxury to play the game of checkers. You have to play the game of what? Chess, right? Your moves, your money have to be planned in advance, well in advance, in some cases, 3 months, 6 months, 9 months, right? 12 months. We're talking cycles, right? 3 quarters, right? Or 4 quarters out of a fiscal calendar. You're moving your money around during those certain moments, right? Because markets move, in tandem through the cyclical nature of certain industries, certain sectors, whatever, under that same cycle. And so your cycle might be what? In its bust cycle now, right? Well, we know tech is definitely in a bust cycle, not inorganically and organically. Why? Because what has happened? They're starting to realize that cheap money is finna go away, right? Of course, a lot of that stuff, these stocks that were overvalued, their PEs are starting to come down now to more fair value valuation, a better valuation period in terms of their forward PEs or whatever, all right, price to earning ratio. So that makes them somewhat look a little more attractive to potential growth over the next 5 years, outside of dealing with supply chain issues, outside of dealing with a tightening cycle of a Federal Reserve. These people say these companies still are founded. They still solid. They still produce revenue, right? It's not like it's game over with them, right? And it gives people a great opportunity to hit the reset button, right? It gives you the opportunity to hit the reset button, right? Kind of like what Google going through, and we'll talk about Google. But it's all earnings, right? It's all earning cycles that produces these kind of opportunities, right? Because now we're at that position now where you're starting to see that, right? So we're talking about those magnets. We're talking about those magnets again, right? We're talking about those magnets again, right? And we can do this all day, of course. Just make a big one here, right? One big one there, right? We talk about those magnets again, right? We talk about those magnets, and then here just said, okay, forget about it. Let's just come all the way back down here and let's just hit this reset button, right? You see what I'm saying there? So you add around that point now where you literally almost back to that of what? To that of what? The pre-COVID lows, Now, I don't know about you guys, but as an investor, whether you like the company or not, because we don't do, we don't do feelings, we only do what, do money, right? That seems to make a lot of, better sense to an investor to say, okay, well, this right here, nothing else, even if it pulls back and tests the 180, 170, I'm still in the window of my principal-based investment strategy where I get a chance to even discount shop more, right? So if I was to ask you guys this right here, because no one knows the future, right, with these companies. If I was to ask any of you guys right now on this live, how many guys think Facebook stock is going, let's say, to $150? And that will be basically down near the COVID lows. How many people think Facebook is going back to 150? Show of hand or use a voice. Use a voice.
Awesome.
Show 150.
You say possible over Rich? What do you say over,
Yeah.
over Chris?
Possible. Oh no, I don't know if it's gonna go down that low. It's a possibility.
The possibility is there, of course. And we know that as investors, we know that there's what?
It could
Anything
test
can
it.
happen.
It could test it and then, go back up. It's possible.
Right. Right. So we're using what they call the probability what? We used this before, we call it the probability bell curve, right?
Right.
Right. What's the probability of that happening? Well, a lot of ways how we can back test the ideal of that is by going and looking at their what? Into the
Go
future.
back further before the COVID drop and see how
Yeah,
high it was back then.
I was just gonna tell you go left. Mhm.
Look to the
That's
left, baby.
right. That's one way, right? You go further back into the past, right? The past puts Facebook hovering at around what? Pinging off a point of around about 150. Below that, it came down to 126 because of the what?
COVID. I mean, no, that's before
but
COVID.
that wouldn't go. But that was they had an
before.
issue then. They was dealing with all that Cambridge Analytical stuff, right?
Oh yeah.
Telling people stuff. See right there. See, that's a fundamental what catalyst that caused that to happen. It was obviously what self-inflicted, of course, right? It was like it was just a mistake. It was self-inflicted because they was out there what robbing and doing shady stuff, shiesty stuff. So they paid for it.
But we want to see
Ordinary-
how it was the highest. What was
Market
the Facebook? The highest before.
Before that, I'm happy you
Yeah,
asked.
like what was the highest that Facebook was before that time? Like 2018, 2017, around
right
that.
here. Look right here.
Right.
See right there, that little peak right there,
Mhm.
around about
It was
220,
18.
right?
The
Okay.
fall of 18.
Right.
Okay.
And we know that to be true because it tested it what several times. It was testing it
Yep.
before the COVID hit. It was right there at the door. See what I'm saying?
Mhm.
So that's your back test there. And this is the Cambridge Analytica, of course, that's self-inflicted. They did that to themselves, right? Shame on them. After that, had that not happened, of course, that still puts them at a 45-year angle. That still puts Facebook around about 250, 260 on an average rolling aspect. If they just played a very, slow, aggressive earnings, game plan, right? It still put them right around that price. You guys with me there? Is it making sense? You're using the
Yep.
cycles to help you also plan out these kind of investments, contractual value or owning it outright. Well, what's the contractual value you get? You have the ability to buy the options, right? You can buy the leaps. You can test drive it before you buy it. Make sense? This is what it's all about, right? This is what it's all about. You have an ability to find these kind of these reset buttons. Well, some would say Snapchat got their reset button tonight, right? Enough that they say, well, okay, if it broke $24, I get a chance to dollar cost average in, even if it comes down to $20 a share, 18, that's really low. That's, the IPO, discount price, you have better opportunity to dollar cost average in at around that price than you trying to dollar cost average in around 50, 60, $70, $80 a share. Does that make sense? Because you get a chance to get more for less. That's the whole name of this game, right? Buy low, sell high, right? I would think so. So that's how you begin to use these cycles to figure out when sometimes it's a good opportunity to add, when is a good time to kind of sit on your hands and say, I'm not going to do nothing, right? I'm going to sit on my hands and do nothing, right? But when the opportunities present themselves, you jump on it, right? or the ideal that if you're in a position to jump on it, you will have at least the ad leads your ability to do so, right? You'll be at liberty to do so, right? So that's using these cycles to your advantage. That's another layer of what goes into your investment thesis, your research methodology, right? Your risk assessment. You're doing all that in tandem to learning how now to check the grape leaves, right? To check the grapes, right? Check the watermelons, right? Whatever season it is right now. This is the season where you're checking it. Where my farmers at the bill? I got him out that grow stuff. Where Ali? I need brother Ali Dawood L right now. Right? He give me some game on, when's a good time to be sprouting seeds, this, that, the third. Right? Because there's a time for that, right? There's a time for that. Germination. Then you have what? Crop, then you have harvest. That's markets. All these little synonymous values or analogous that we use this to help you formulate a more constructive thesis when you're out there trying to put together a good investment strategy. Does it make sense? Right? You wouldn't struggle with the idea of using natural common sense, natural observation, business-minded decisions that you typically would do in your own, personal stuff, and say just, okay, this is a company and they benefit during this time of year because this, that, third. Oh, and the stock is cheap right now too. Okay, well, maybe this might be great. All right, so let's say if we lose the VWAP here at 220, it definitely almost tested today, and we know that we still got rate hikes coming up. We may get a chance to test it, or we may not. Why? Because what also happened with, you say, the company like, and it was strategic, of course. I use this as the same case study we talk about with Facebook here. You take a company like this company right here. And this right here was such a given. Oh my goodness, it was a given. This was a given. Why? Because you knew they was coming to the aid of this thing right around that same price that it fell to. Right? Because we were fortunate to eat it, take it to the downside, right? We clean the clock on it, right? Right? What, like $100, a couple $100 turned into like over $5,000, right? Like when those moments happen, you like, okay, I'm not finna fight that. Here was the signal to kind of let you know that was getting ready to happen too, right? Y'all got to see this here because y'all already know how this stuff works, but sometimes it's hard for you to register it to make the kind of risk profile assessment on an opportunity like this and not feel so scared about it. Why? Because you feel like, man, if I get this wrong, I'm gonna get punished, right? Why? Well, worst thing to have you lose a little money, but you already know the risk profile. You never invest more than you have willing to lose. If it's not worth it, don't take it. Don't try to prove nothing to yourself. But again, we're using the same thesis, right? Moving averages act like what? I got to keep putting that out there because this one out.
Magnets.
Would that be synonymous right there to say that this right here suffices to be a very accurate assessment that this has to kind of have a moment of what? Reckoning? Being that extended away from that moving average? Would you say the probability of this coming down and pulling back seem to be more probable in this perspective as opposed to, let's say, this here or this here? Would you say this area here seems more probable to pull back above
Yes.
these and these?
Yeah.
Y'all would? Now, imagine you having the conviction to take that trade. Let that marinate for a moment. Imagine you having the conviction to take that trade based upon you already have a compelling technical story here, right? What's left after you have a technical story? You have to find the what? The fundamental story.
Fundamentals.
Make sense? Because you're showing peak value elevations here. You're showing peak value, right? You follow the market just like I do. If you're already at a point where you're following peak value, it's at peak value, basically, essentially, right? Well, what's left? They have to be able to come out and what? Turn water into wine. They got to pull a Jesus move to go higher.
Sure. How you pronounce it?
Make sense? Why? Because y'all know as well as I know at around what, October of last year, what was starting to happen? The conversation that what was getting ready to happen in terms of the Federal Reserve?
Shut down?
What was the Federal Reserve getting ready but y'all was already hearing from the Federal Reserve back in October of last year? What was getting ready to happen monetarily wise?
Raise the rate.
Potential raising the rates.
Interest rate.
Right? Quantitative tightening, right? All that stuff was pre-programmed from Jackson Hole. Jackson Hole happened during what? In August. They start laying the groundwork well in advance. They already tell. They were like, hey, we're gonna give you guys well enough notice in advance to know what's going on, right? A lot of people short that stuff out like, man, the market, it can do no wrong, buy the dip. Right? And they'll buying up here all-time highs around $600-700 a share. Oh, we finna go to 800, 900. Bro, they getting ready to tighten. They finna cut the spigot off. What are you talking about? They finna ready to potentially even raise rate at some point. Is it good to be buying way up here, or you would rather want to get this at a more discounted price? Because right now you're showing peak valuation, you're showing peak elevation of technical analysis here that's putting you well above, moving averages, histograms, stochastic, all this stuff. You're sitting up here at peak everything, RSI, everything. And you have the conviction to say, oh, we got to go to what? 900 from here to 1,000. Like, at one point, do we start really owning our training, our education to say, these things are there for a reason, right? We know that they can defy odds and go do the opposite, right? We know it happens a lot, but it's not centric towards making a more educated decision about how money really works. When you know that all these tea leaves are aligning and it's telling you, hey, okay, this is just a little too much. And again, markets can remain irrational longer than you can remain what? Solvent, right? But this is non-negotiable when you have these kind of scenarios. Why? Because essentially, if you follow their earnings cycle, Netflix is going through the same thing. They're kind of like a social service too, right? Obviously, streaming, right? That peak moment happened during what? October, November, right? Coming out of what? Summer months, right? Blockbuster shows, people home watching TV a lot, right? Make sense? Kids, before they go back to school, all of those shows pop that people binging on during the summertime. That's what? Ad revenue. That's people buying the subscription during the summertime because they got nothing else to do. They sitting around the summer camp watching Netflix at the summer camp. Does that make sense, guys? Is it clicking a little bit?
Yeah.
Yes, sir.
Cyclical nature. I'm just speaking from the psychology, and we marinate it with the technicals, and we can back test it by the fundamentals. Why? Because that's when they're making the bulk of that revenue based upon utilizing that what? That time when people spend their money. Right? And it's just they got well endowed ahead of themselves, ahead of the print. When I say ahead of the print, meaning ahead of that of the Federal Reserve, ideal that they're going to at some point cut this spigot off. So people were like, okay, this is a little far-fetched, because they were already giving you forward guidance that they may come in soft on what? Subscriber. Why? Because everybody that wanted Netflix probably already had it coming out of COVID, meaning out of 2020. Would y'all agree with that? Like, if they didn't get it in 2020, the last stragglers that bought got a Netflix subscription in maybe the first 2 quarters of 2021, that was basically going to be peak. Could y'all make that kind of executive decision, guys, on your own? I'm asking for a friend.
Yes.
If we thinking
Yes,
like
I can. Tell me I'm asking for a friend.
Right, I'm asking for a friend, because if we're gonna consider ourselves executives, right, we're honorary board members of these stocks because we have equity stakes in them. We have the ability to making a monetary assessment of their situation for a living. How hard is it for us to realize that in terms as consumers ourselves, right? You got Netflix, you don't. How hard is it to see that? Right? You can kind of follow. Is it making sense, Obashan? I said you open the mic. Is it making sense?
Yeah, it's clicking. Definitely.
Right? We're utilizing this stuff to make it all make sense. What's going on, Over David? I see you crept in the building. I'm kind of getting it in. Over David Gerald in the building. Got 2 Davids in the house this evening. David Gerald and David L.
Look, I'm learning, I'm listening, I'm soaking it up. Like I'm with the executive decision because that quarterly situation, I pay attention to that as well too. And that's how I've been trying to learn it. It's just reading the scale and the actual bars and everything has been a little challenging to me. But the more and more I listen, and the more I look at it, like I'm getting the feel of it. But just knowing how business works, working in retail in my life and doing business for so long, like I get it. I get exactly what you're talking about. Peak seasons, low seasons. Even me running my company, like my low season is, from December going into like March. It's like kind of because I had a high season in September, October, and November. You know what I mean? And like half of December. You know what I mean? So it's like, I understand, I get it. So I'm just trying to get more familiar as far as like bigger companies and how they operate. But we got to like listen to some of the aspects that's going on as far as the earnings, but just knowing just how people spend money is a whole nother avenue. So that's what I'm trying to learn as well, to put two and two together and know how to invest smartly and listen to you. You know what I mean? Get excited.
Get excited, right? Juice, right? Let's go, right? That's 100% right and exact. This stuff is not outside y'all pay grade. Why? Because we're the end user at the end of the day. We just happen to have what? The best of both worlds. We're investors, traders, and we're consumers. Majority of our peers are just what? Consumers. They're the ones we test drive everything through. Like Mike, give it to Mike and he'll eat it. Right? How you feel about this product? How you feel about this service? Because you see them obviously what? Spending money in it. Say again. Somebody was breaking up. Say it again.
And consumers turned investors.
Consumers turned investors. 100% right. Not hard to read, the tea leaves in a company like Netflix.
Turned investors.
Yeah, consumers turn to investors, right? You pinging a little bit too, Open Chris, but I think I heard you said it right. I think consumers turn to investors. It's essentially what we are, right? That's what we are, right? We're consumers who have now turned into investors.
True.
Remember, I used to say that we know products better than anybody on the planet. Why? Because we're the biggest consumers on the planet, meaning Black folk. Not that it's universally a race dichotomy value, but it is to a degree, because a lot of things that are being marketed and produced are based upon our likeness to spend, and kind of for whatever reason we spend for, right?
Yeah.
But they're tracking a lot of our spending habits in producing products to what aid in that regard. That's why everybody comes to your neighborhoods and sets up shop. Asians, because they know you like pork fried rice and grease and chicken wings, right? Arab, because they know you need a corner store, what? Habitual habit of coming in there 2-3 times a day. If you ain't got nothing to do, you definitely gonna be in there more than that, spending money. It all adds up. Penny candy, penny candy, penny candy. Gotcha. Right? And cleaners, what? Also Asians, a lot of times too. They hit you on or Mexicans, right? They hit you on the cleaners. They know you coming. Your money is what? It's revolving, right? It ain't bouncing too much in your neighborhood. It's bouncing in everybody else's pocketbook. Right? That's the case that in itself. But we know that now because we're of age now, all of us, to know that, okay, this is how these companies come in, or businesses or people come up shop, and they just feed off us. And the majority of them are not giving back, right? That's another problem, right? Not the, sidebar, but that's the reality stuff, right? Their peak season revenue comes the value when y'all have peak consumerism. Oh, they finna come by to mess out these chicken wings. It's summertime. They're gonna be here every other day buying chicken wings. They don't want to cook. It's summertime. We finna make the bulk of our money during the summertime at around the bodega.
Hey, just food for thought, to piggyback off that one thought, they done came out with this little simply like alcoholic drink. Man, that's like Coca-Cola and all that. It's about to boom. It's gonna boom in the summertime. So look, if y'all ain't got some money in Coca-Cola, I'm trying to tell y'all it's gonna boom.
Well, it's seasonal.
It's crazy.
Right?
It's crazy. It's like simply.
Right. It's just that. See, that's the whole part of this conversation. See, that's the value of earning cycles or cyclical nature of how consumers spend money. We get to track that because we know consumers, us, and we get to follow the value of how companies benefit from that when they R&D into that, or CapEx spend into that, capital expenditure spending into that. They're planting the seed now so it can sprout later. That kind of reality, right? This was somewhat that kind of season for Amazon. Amazon typically does their seed sprouting or seed planting cycle during Q1. Right? They do they seed cycle actually during the Q1 session. This one-off event here was just more of a technical bout, oversold, low estimates, and a need to kind of fill that void of not feeling like they ain't got no control over their business model. That was in a nutshell. That gave them more favorable opportunity to beat their earnings this cycle than it was when they were about saying they finna have low operating income, this, that, there. Because that was a lot of my thesis too. Because I do pros and cons. I don't just fall on one side. But that was the pros and cons. Low operating income. They were talking about supply chain issues like everybody else. They deal with a lot because they pull from a lot of different products from all around the world. This is the behemoth of a online, conglomerate. But we know they still came out of what though? They came out of a Christmas cycle or a holiday cycle too. Even though online sales were dismal this year on a per capita perspective in terms of different retail company. But for the most part, most people just did more consolidated shopping, meaning they bought through one online retail consumer than they did from just spreading money around to a lot, right? You had to be that one to carry all the goods. Why? Because I guess it just made sense to people psychologically to spend that way if they was already kind of working with less. So obviously Amazon was going to benefit from that from some perspective. And the chart was just itching to be potentially in what they call somewhat like territorial. It was territorial, so to speak. Now it's weird too, because I didn't have to move this little circle up here I drew. Look at it, it's in the same spot almost like Netflix was. The only thing is that it didn't come down to test the view app, right? Like Netflix did. But is Netflix Amazon? Clearly they're not.
No,
not even in the same breath, right? Right? You're more reluctant to spend money with Amazon than you are with Netflix, right?
X.
Well, what do Amazon also had that Netflix has?
You said, what do they each have?
What does Amazon have that also
movies,
Netflix have?
Streaming TVs that show.
They have
Movies.
streaming, yeah. They have streaming.
Sports, they got all that. They got all
Yeah.
that, right? And so it's like, and then some, right? When you say and then some,
And
right?
their
Now
own content too.
Right. Now it may not be good as Netflix because some of y'all be like, hold up, bro, but that's the crappy over there. They be playing over there crying. But they got you what? Books. They got you music. Do Netflix have music? Netflix doesn't have music, right?
No.
They don't have local TV, right? Sports channels where you can watch playoffs and all that stuff like Amazon.
Yeah, Amazon offers more.
Right, more for less. How long has Prime membership been $12.99? That's what it is right now, right? $12.99, right? How long has Prime membership been $12.99 for Amazon? Anybody? Nobody chance?
You said, say that again?
How long has Amazon membership fee been $12.99?
Shoot, a while now.
It's been like that for about at least 4 or 5
At least 5 or
years.
6 years.
How do you know that?
Because I was paying it.
I wasn't paying it, but I knew that's what it was.
Matter of fact, it's been longer than that. It's been at least about 7. At least 7, maybe 7 to 8 years.
What if I told you they last, as they say, membership
They changed the price. Yeah.
It was in 2018.
You said
Don't even
what?
seem like I could do it. It was in 2018. The last rate increase, membership rate increase.
Oh yeah, yeah.
But it was so insignificant that it didn't feel like it was a lot. You see what I'm saying?
That's how they do it.
Because they got so many other things that they can buffer the cost of raising the membership fee just to the value of the extra service that they're going to provide in football and all the other stuff. It's incremental. Netflix jumped basically from 9 to dang near 15, 13, 15. Now they talking about near $20 for Netflix membership. And all you offer is movies. You ain't no teacups, you ain't got no pork fried rice, you ain't got nothing, bro. That's all you got. And you can it's a mental perspective, right? You realize that this company has more to offer within that perspective, but in the same breath, like the other companies, right? They're going into a super tightening cycle with the Feds, cheap money getting ready to dry up. They had hit peak what? They had hit peak earnings. The chart told you, because you can also follow the money by following the chart. How do we know that? Because the candles represent what? Buyers and sellers, right? And separation in terms of when you're looking at stocks that are having this kind of, linear move or whatever you want to call it, it ain't hard to realize that, again, this is what you have in what they call limited knowledge about how technical analysis work, on a chart like this, right? You just come in and saying, okay, if it look like it's up and it's more green than red, that means somebody must be doing buying, because green associated with what? Go. Red lights, we're playing red light, green light. I'm taking y'all way back to old school game. Like, you ain't convinced, discombobulated by that understanding, right? You're not, right? You seen the benefit of the COVID lows here literally because it became an essential business, right? Amazon became essential because of COVID, because they need to have get people their toilet paper, their Lysol wipes and all this stuff. I mean, they couldn't make this stuff up, right? And then eventually just kind of trailed at around this little box here. It was in this little box here, right? This 3,000 box, up here close to this 3,800 box, somewhere around there, right? Give or take. And just trading that box like for the longest, right? And then the idea of cheap money is going to dry up. Okay, let's pull back a little bit. Let's kind of reset. Putting this on a linear level, right? Excuse me, a linear level. That puts, and again, mind my drawing. Don't y'all come for me. If we put that on a 45-degree angle box, line, don't that look about right there, guys? Are y'all with me? Can y'all see that? If you put this on a 45-degree angle, we know markets like to move what they call 45-degree angles on average, right? Given the growth, given outside of COVID being an exemplary opportunity for them to make money, even without that still put Amazon at around about, let me do this. That way it'll, hold up, dog. That still put Amazon at around somewhere around here, $2,500 a share, between $2,500 and $2,700 a share. It was no secret how you even bounced off of it tonight at around that same level. Worst case scenario, they missed. They came down and tested the VWAP, right? Well, in this case, below it, because it would probably went below it at that point. You'd have came down, probably took those guys or tested these guys down here around about 2,100. Those guys down here in then 2,000, right? All this chart right there, that's buyers that's sitting down there. Those guys are pregnant down there, right? They ain't ready to deliver that baby yet, right? Double top right there. Not hard to see that and see that that's a level of control. Why? Because there's a floor there, there's support there, there's people still holding shares there. That hill from 2,000 all the way up here, dang near 4,000. Almost double their money per share. That's how markets work. Right. So it's about, you being able to offer more for less, or people feel like they're getting a bigger bang for your buck. Now, in the streaming war, I'm using it as a case study. In the streaming wars, something gonna give eventually, right? Because it's becoming saturated. We know Netflix is 100% pure play on streaming. They don't have no other ways to generate revenue as of now. So that's why it's a big push for them to do what? Buy something, right? Particularly like online gaming. One of these gaming companies, right? This whole idea of them buying, Electronic Arts or something like that, the same way Microsoft just bought Activision Blizzard, right? They need some other way to generate income. Eventually, they're going to be forced to, because their users are starting to dry up. They're hitting peak season of monthly active user or daily active user values, or the people that's signing up, essentially. That was very detrimental in their earnings call. Make sense? So they have more to lose than that of Amazon in this perspective. I'm only saying that because, again, you're using that as the earnings cycle the same way to make that comparative analysis. That's why it lost this VWAP, this red line, this very important red line called the VWAP here, the volume weighted average price point, right? They lost that, right? They lost that. It came all the way down to 350, obviously right into an area of support around here, this 350 area, 330 area, whatever. That was obvious there. And then it bounced. Income fame investor, ESG investor, right? Bill Ackman, right? Bill Ackman opened up the purse and says, oh, this is just overdone. Why? Because he saw the same thing everybody else was seeing. Everybody else was just kind of still skittish and wait to pull the trigger. Some of us was not. He saw this loss of VWAP. He saw this big drawdown from peak way down here to trough on a fair value aspect of Netflix being able to hit a reset button on them and then benefited from it. Right? He essentially got a bounce from 350, 340, all the way back up to dang near 450. So he got a 100-point move in about 3 or 4 days. $100 per share in about 3 or 4 days, on top of hundreds of millions of dollars that he put into that stock at that price. Now he already owned the stock. He wanted to, I think Pershing's Holdings is maybe like the second largest or the biggest largest holder of Netflix assets or stock. So he would be considered an institutional investor, of course, but he saw it as a reset moment. cyclical nature. This was their kind of worst perspective in this regard. Now they have to figure out how to R&D to figure out how to way to bring in more revenue, get the daily users up or monthly active user fees up, whatever, revenue subscription, whatever. And they have a cycle to do so because Wall Street going to be more forgiving to them going into Q1. Why? Because that's the season where everybody go through what they call their crackhead season. That's the markets. Typically Q1 is worse for a lot of stocks. A lot of companies, because that's when they're doing a lot of they're pre-planning for mid-cycle to the end of the cycle of the year to get ready for holiday shopping. It's cyclical. Actually, think about it for yourself, right? Do y'all spend the bulk of y'all money, let's say right after tax season, right? Most people spend any taxes now, whatever. By the time you get into March, right, April and May, are y'all spending buku money at that time? Like some people taxes still coming in there and here and there, but you're not thinking like you would be, let's say at the end of the year during the holiday shopping cycle or during actual peak summertime when people are home and this, that, and third, you taking trips, whatever. That's kind of like called a dry period, right? That's that dry period, right? It's that dry period. Businesses run under that same diagram. No different, right? So that's another way to do it, to gauge an earnings season or a cycle outside of any kind of, again, abnormalities or ambiguity aspects of markets having other things to deal with. In this case, we know they got to deal with something because they got to deal with what? Low interest rates coming up, right? They got to deal with a quantitative tightness getting ready to happen. QE4 is coming to an end, right? For now, right? They can easily downplay it and do something else. But we do know by March what's going to happen. That $120 billion can get ready to go what? It's going to go bye-bye. That's $120 billion that been also float the market on a monthly basis. $20 billion towards mortgage-backed securities and $80 billion towards what? Treasuries. That money finna go bye-bye. Now, we still know that there's other things holding the market up. Well, the only thing that's holding the market up outside of that quantitative tightening aspect of that is going to be what? The Fed's what? Starts with a B, starts with a B, right? The Fed's what?
Bye.
No, that's finna go away. Remember, they finna do it with the bonds, they finna do it with treasury. What's the only thing will be left holding the market up at this point as far as liquidity in the markets? Starts with a C. Starts with a B, and second word is S. The Fed's what?
BS.
Yep. First word B, last word starts with an S. The Fed's what?
Balance sheet.
Come through over. Say it with your chest.
Balance sheet, man.
How much money is sitting on the Fed's balance sheet right now? Anybody?
$9 trillion.
Say it with your chest over.
$9 trillion.
That means $9 trillion is still support the market even when they remove away that extra layer of taxation and $120 billion they pump the market every month. Convince me how that craters the market if they don't take that away.
Mm-hmm.
They built that over time, guys. $9 trillion propping the stock market up. It's the reason why we went over $30 trillion in the national debt, too. Y'all know that, right?
Mm-hmm.
That wasn't consumers. That wasn't y'all. That wasn't y'all defaulting on debt. That was none of y'all fault. That was 100% the Fed. All planned and under this wealth heist that they put forth here, it was already what in the making. And they used y'all tax dollars to do it. Tax dollars to do it.
Yep, we can pull up that U.S. debt clock.
Right. And they did it without y'all consent. Did they have to ask y'all, were y'all, comfortable with them doing that? Did they get y'all permission? Did y'all get a letter in the mail saying, hey, did y'all do y'all sign up for this? Us using tax dollars to fund, Wall Street and, blow this national debt up and, run on this money into the Fed's balance sheet in a way where we utilize this money to actually work against you because now it has driven up the cost of inflation and we're going to hurt you through the pump. We're going to hurt you at the grocery store. We're going to hit you on other kind of stuff, commodities and wood, lumber, steel, aluminum, platinum, diamonds, whatever you get. Did y'all give y'all permission or consent with that?
I didn't get the memo.
Not one, right? Not nan letter showed, like Baby Potter said on high, not a nan nutter, Baby Potter, not a nan nutter piece of mail came through the box to let me know I was supposed to be, say how they do you. They do it to you in plain sight. On Broadway, in a Broadway. And people convinced that their selective outrage only go as far as what they feel like, they feel like they have power to kind of push back again, which kills me when you think about it, because financially, you in a dog-eat-dog society, right? This is a debt-based society, a country, a corporation. It's a business. It's a business. America is a business. The patrons that live within it, the citizens that live in it, have to conduct business every day on a proficient level to be able to not get absorbed into the debt structure and go under. Like, you got to be able to think or sink or swim in America, or you're gonna go under. Other places you can kind of get away with kind of free flow, but you don't have that luxury in America. Why? Because the cost of living goes up every year. The cost of goods and services goes up every year. Notice it never goes down. Notice that it never comes back down. It never goes down, right? We never have a deceleration value in that. They figured out how to continuously get more money out of you by trying to give you the illusion that wages and things are keeping up with the value of excess of these costs and goods and services to the point where you'll be able to pay it. It's one big, case study. It's one big case study. See who's gonna fold first. That's why the separation between the wealth gap and those who have and those who have not is starting to widen. And every time they do excessive money printing, guess what happens to the wealth gap even more? It widens more. Because ultimately, more Black people are not what? Not asset owners. We're far and few between in the asset ownership world. Now, how you gonna survive? The national debt eclipsed over 30,000. Give me 30 trillion. I wish it was 30,000. 30 trillion. None of that trillion came over the last year and a half, near 2 years. That typically takes a sitting, about three and a half sitting presidents to have an extra $9 trillion run on in terms of the federal balance sheet. That's how much time it typically takes, because they factor in about 2 trillion per president, give or take. Well, we've already exceeded that in 1.5 presidents. So the next couple presidents can just sit it out. They can just go shoot pool all day, go whatever. Money already baked in there. That's what has caused inflation. That's leading now into stagflation. And the one thing that they could do to eliminate a lot of that stress off the citizens and the balance sheet and the debt structure of America is pay off this one thing right here. What's the one thing they can pay off right now that'll help put everybody in a better position to kind of better build out a better how can I say this? A better opportunity that now they can innovate better and find better retooling skill sets to kind of help benefit the corporation. If they remove this one layer of debt, this will really help out the entire system in itself. And it's
Student
the one
loans.
thing that they say it with the chest open.
Student loans.
Student loans. The reason why they were, look at how much the student debt is. Y'all see that there? That's 1.7 trillion. Jerome Powell printed that that much in the last 2.5, 3 months. Somewhere around about 3.5 months, he's printed that much on his own.
Wow.
And he gave it to who? Who did he give it to?
Institutions,
Wall
hedge
Street.
funds.
Wall Street.
Say it with the chest, right?
Wall
Gave it
Street.
straight to Wall Street. And Congress saying, oh, we have a problem because we don't know if it's if we have constitutional power to be able to, the president wasn't sure if he had constitutional power to be able to eliminate student loan debt when we know he did. He played that game during the election that if you vote for me, I'll eliminate student loan debt. Them people and lawyers and constitutional lawyers already had looked over that stuff and knew that he had the power to do it. He wouldn't have ran on that being gullible if he felt like he couldn't. Then he played dumb and saying, I don't think I had the power to do it. Y'all notice that? Y'all remember that? Got him.
Yeah.
Because most people are emotional as opposed to calculative, and especially our people, because that's who basically, again, I'm not making this political. Y'all know I don't do political games. I don't do Republicans. I don't do Democrats. We the money crats, right? We have our own little political party. We call it the money crats. We only focus on getting paid.
Like that.
Right? We money crats. You know, that's our t-shirt. I need to get Sister Kiana to go and print them things up. I've been putting it back. But that's our reality. This right here wipes that. If you remove student loan debt, because student loan debt is federal, it follows you to the grave. You can't even leave the country with outstanding student loan debt. Or it's the only debt that can extradite you back to America. Somebody make that make sense. They can come get you for student loan debt. Even down there in Tijuana, you could be all in in the Turks and Caicos, you could be in the Balkans, wherever. They come get you for that student loan debt, bro. Hey, bro, I'm out here with mimosas. You just gonna come put me? Yep. Let them cuff right on you. Bring you all the way back to America for student loan debt. Not house debt. Not you going under your mortgage. Not going underneath expensive car. They come get you for student loan debt though. Why? Because you could file what? Bankruptcy for those. Get absolved, get your credit cleaned up, get right back in the game. Student loan debt on a subpar education system, and they hold your feet to the fire on that. Move on, brother. Move on, brother. Move on, brother. So that's why that's important, because they know that's what they call indentured. It's indentured servitude to a degree, all over again. Borderline slavery, but it's indentured servitude, student loan debt. It's one thing they know they got you. They got you. They got you on that part, on that one, and nothing else. Your pursuit to want to do better, but that's when they get you on. Right? That's how they get you. So, sidebar. Asset owners, you in a better position than what? Eliminate that $39,000 per student. You're in a better position to eliminate that $39,000 if you have the ability to what? Own and control assets, as opposed to working really hard for Mr. Charlie to work it off. They know that too. So they have it hidden in plain sight, like, okay, well, we finna give all this money to the stock market and Wall Street. If you smart, hint, hint, wink, wink. If you smart, hint, hint, wink, wink. You'll get behind this too, because we finna do the biggest wealth transfer ever in American history, world history in this case. If you smart, you'll start dollar cost averaging in right now to some of these big, better growth stocks. And eventually, if you smart enough, you'll be able to kind of at least take down a per value of about 39, 49,000 or 40,000 yourself, over this next, yearly cycle. You know how hard to convince people to realize that, to put their money to work for them and not feel like they got to go work hard for it by getting 2 and 3 jobs? Because the system has got them so indentured servitude, value minded to this, which leads to student loan debt going through the roof, credit card going through the roof, which also aid the value of the national debt going up, because they wait for you to default. They wait for you to default. They want you to default. Mind you, they want you to default so they can eat off the bonds. They're waiting for you to default. They're not educating you not to default. They're waiting for you to default. They know most people are. Because they're not teaching proper what? Financial literacy, economics. All this stuff ties into what we've been talking about tonight, because I know it seems like, well, and where this conversation comes from, it goes right into what we talk about for our cyclical nature of markets, earnings, the whole reality. When you have cycles, when you have money, when you go through your tax season, you go through your moments of having extra income, what do you do with it? Do you surplus it through, do you spend it through ancillary, invaluable things that don't appreciate? Not to say that you should enjoy yourself, but are you giving more to those things as opposed to your investment rally to make your money work for you in the long run? Where's your balance? Is my point. Where's your balance? You got to have a balance. It's hard to think that way. I know when you've been used to doing it one way for so long. The light bulb went off for me, was like no brainer. I'm like, I'm not going to fight this anymore. I see how these people then rob me 5 ways from Sunday, bruh. I should have been, again, 20 plus years ago, dollar cost averaging in, dollar cost averaging in, dollar cost averaging in. So this is the reality. This is the thinking. This is the This is your brain on some serious, serious opportunity. I say it that way. This is your brain on opportunity. Because utilizing it properly, then yeah, you would definitely be in a better situation or a better opportunity than that of a lot of other, scenarios or people's scenario alone that has, again, only one tranche of income coming in. They may do well in what they have, but again, if they're still not centered towards investments, investment minded reality, then they're not really, what I'm saying? They're not really going to be able to really, maximize their opportunity or their revenue. Right. Again, that's just basic from my assessment, my opinion. That does not necessarily make it concrete. Everybody's situation and story is different, unique, whatever. But that's just how I look at it. Right. So not far-fetched to start moving and shaking and thinking a little bit different. We utilize these assets for that same reason. We follow their timeline. Essentially, we're following their timeline like a soap opera. I told people, I was saying that earlier today on the live stream. I said, this is almost like the greatest, this is the greatest, what do you call them show? The reality show ever.
Sitcom.
Right? You probably sick in some cases, right? Right? It's the greatest ever. If you person that love drama, get into the stock market. Your cup runneth over. Your cup will run it over.
Better than reality TV.
Man, look, every day. What that little rap song, Every Day is a Holiday? What one of the little rappers to sing that song, Every Day is a Holiday. Every day is a holiday in the market. Right.
Yeah.
That marinate for a moment. It's Christmas every day for some people. Majority of those who already have, because they can get more, right? They can get more. That 3% look good on a million or on a billion. That marinate. So they separate even more and more in terms of being more wealthy just by those small little divisional values of opportunity and growth. Where we're like, oh man, I need at least 60%, 70, 80 to really show a magical game. But again, we got to get in the habit of what? Realizing this is a base hits theory. Get on base, get consistent, get happy we're in that 4-5%. Eventually your dollars are gonna start to what? Accumulate, and you can add more lot size. You can begin to increase more your risk assessment, and then that money will still continue to what? Accessorize. Ever since I've been doing this little small piece of change for little some string for a small piece of change campaign, y'all know I went on that. I started that last year, 2021. I said I'm gonna do this little, show you how to, we're gonna rock this, small piece of change campaign. And so I'm 30 here, 40 here, 50 here, right? That stuff it says exceeded. I'm using a lot of that profit still today to fuel some of the other trades, and I was using that as a case study. So it has literally more from 70 here, 80 here, 100 here, spread out. Now it's showing to be 250 here, 500 here, 600 here per lot, meaning per, seed that was planted within the contract. And you totality all throughout the day, you talking about, we're talking about $1,000, $1,200, $600. Sometimes is, some days y'all see I just go, show up like I would make $2,600 today. All right, here was a $5,000 day. That's a binary because we talking about earnings. That's just another way to kind of have that, that extra, pop. But that's how you timeline out your what? Your success by your base hits, and your money fuse the next tranche of money that you're going to make because you add on to it, right? It's like dollar cost averaging. And then when you attach interest to it, they call it compound annuity growth calculator, that Cager, whatever. That's when it gets scary. You're like, man, how my money just ballooned that fast? There's got to be some magic. There's some tricknology. That's how this stuff works. That's how wealthy people continue to make more money. We're trying to superimpose that into our daily our daily life. And we busy, folks. I get it. A lot of us are super busy. You got families, you got other things you got going on. This is just one of many. This is not the end all be all. This is just one of many. It could be for some people, if you got the time allotted, But for most cases, we're not even pushing this like that. We're saying, hey, find the time to add this into your repertoire. Let that supplemental income fuel a lot of the other projects that you have in your life. And eventually, you can also then begin to upsize it. Why? Because the income that's been coming in on a more consistent basis, right? Where you can add a little bit more extra layers of risk to that value to get a better payout, risk versus reward, right? No harm, no foul. More conviction, better knowledge, better intel, better decision making. The money will obviously be there. So we're playing, we're playing under the rules as we've been taught to, as we profess here, is that we're trying to get people centered towards what the education. The education is not Harvard, MIT. Again, I keep saying those things for a reason. People learn this stuff in their spare time. Holding down a job or two, got kids, got a spouse, got all this stuff going on, and they still find the time because their interest level dictates that they want this. Because they probably saw somebody else, and whatever the story is, doesn't matter. If you hear you in a better position than a lot of your peers, I bet you that. And that ain't no swipe at them, but that's just a fact. If you hear you're in a better position than a lot of your peers, even if they got a PhD attached to their name or a master's MBA attached to their name or any of that, MA, whatever, you still better than majority of them. Because again, in a given moment, your bank account can change overnight. Oh, you caught that Facebook drop? Oh, my bad. Oh, you bought some puts, huh? Oh, you bought in the money at 320, huh? And it dropped all the way to what? 240. I'm sorry you made all that money. My mistake. Oh, you bought Netflix in the earnings, huh? Oh, you bought them out of my, oh, you bought 1,000 worth, and now that 1,000 worth around about, but it'll be worth like 50,000. Oh, excuse me. No, it'll be what, about 10, 5. Yeah, it'll be close to around about 50,000. Let that marinate. In that moment, I'm just using that as a case. In that one moment, a little over $1,000+ turned into around about 50,000 in a one binary event. One binary event. Joke be like, how that make that? That don't seem. Joke be scratching their head on that stuff. They're like, man, they got to be some trick. Now, this a scam. You either got to fall back and say it's a scam. That's all you can say. Because you can't fathom that. You can't, make that make sense. Like, how that don't make sense. I mean, 1,000 could have turned into 50,000 in one overnight event, binary event. Yeah, that's basically what happened in that. That's just a part of what we say, right? That's why you stay ready so you don't have to worry about what? Getting ready. It's just understanding your risk factor in this. What are you risking? The risk is also in the education. Why? Because you have to feel confident that you're doing everything properly in a way that you're supposed to as well. You can't shortcut this thing. Well, Sister Shanika, she ain't on here yet tonight. Well, she probably be busy. But I got to use her as a case study. Boy, I tell you, where my Sister Shanika? That joker jumped off the port, boy, that joker trying to get it. And again, got all the ingredients, but now she got to figure out how to put them all together. Compartmentalize it, all that stuff, and grow respective to that of her natural timeline, because she's definitely been finding some assets that have produced some good opportunity. That's that willingness to want to learn. That's what I love that about her. She's hungry, but she just still jumped off the porch a little too soon. Some of that stuff, right? That happens, right? Eventually, she'll learn how to woo-saw. She'll learn how to decompress, make it all make sense, and then she'll learn how to put all her eggs, in a row properly as he's supposed to. But that energy she had to want to get this, priceless. Some people are like, man, it's a lot, but it's priceless. Because that's when you say, how bad do you want it? Right? You come from that over David. I got one of my old corporate battle mates on David Gerald. We had to go through them questions, training. How bad do you want it? Right? Go through all that. Fear, loss, and look, priceless, priceless training.
Yeah.
Right. I was telling Sister Monica about that. How a lot of the night we was out working, and we get a call from corporate, the big dog, Mr. Tenenbaum, and like jump on the conference call. We got, John C. Maxwell finna give y'all some good game, just out of the blue. That, best-selling published author, they just paid for his time to get on there to give us some game about, self-help, inspirational values to help you what. It's that kind of energy. It's you have to say to yourself, okay, whatever I'm doing right now, I'm finna stop this, I'm finna soak up this good game. Right. And this was on the house, of course. In this case, they paying for it. I recording everything.
I miss those days. Ooh.
Man, pull side the road. I'm recording and pull side the road, getting this game, soaking it up. But this is the reality within that. It's the same breath of value, what we're doing right here, because we're think tanking together as a clan, so to speak, utilizing these assets, right? Because I got it on here for a reason. It's earnings whisper. This is what we're talking about. It's earnings, right? It's an earnings season, right? It's an earnings cycle right now. And where we know a lot of these companies going to be it's going to be a lot of hit and miss for some of them. And for others, it's a moment where they've been able to kind of still shine. I mean, look what happened with Amazon here. Look what happened to EPS here. They beat their EPS by 615%. That's a growth of 96.9%, on a per annual basis, on a aggregate. But in this quarterly value, they whooped it by 615%. Like look at the separation. $3.88 per share as opposed to $27.75. Now the stock is obviously still well or expensive. We talking about $27 per share. That means the stock price is supposed to be $27 a share, but it's sitting at what, 3,000. Clearly, that's future valuation. That's how this stuff works. But again, like that's crazy. Like what happened for them to have such a mega blowout in terms of their earnings per share? Well, the devil's in the detail. That's why you go through the financial report, figure out what caused that big beat. What caused that? Right? See, that's how deep the rabbit hole goes, because it puts you in a place where you'll always have content. That's why I say, if you love drama, you have endless content if you're an investor. I mean, don't fall to the wayside like the AMC and the GME side. Now, again, shots fired, but again, I got to use them as a case study too. Don't go into that rabbit hole, right? But that's on a whole other level. Them jokers get no sleep. And all they talk about is the potential, what it would be if pink unicorns and and flying horse and whatever. If that scenario ever happened, they'll like, see, I told you, right? But we know that's a whole, oh boy, that's a mess. But aside of this is more control. This is fiduciary responsibility for your own household, yourself, and your money. You're working it. You're working it. You're working it for a change. You working your capital for a change using these assets. And this is not saying you got to go out there and day trade. This is saying just put it to work on a structured calculative value. Find you good investment opportunities at companies that meet or exceed your needs or your intellectual level, things that you may have a liking to, or just figuring out where the money's at. Set up your seed, water it, check on it, and build. It's still going to be the money market account. Money market accounts are pretty much garbage for the next 3-4 years, at least minimum. The Fed already told you their rate hike cycle, even if they have to kind of throttle up and throttle down in some cases, they still tell you that rate, even the money market account's not going to be anything worth anything. Even though interest rates themselves can run up in terms of the bonds, that can cause them to kind of be forced to. But for the most part, you still got 2-3 year window cycle before money market accounts can even be, somewhat looked at. And I'm only saying that because if you got to have a certain amount of money to make sure that equates to you not getting ate up in fees to the point where the interest that they're going to tax your money is worth it. If not, you're going to be paying the bank to hold your money, essentially. That's dumb. That is dumb. When you can just put it in an index fund, or ETF, a SPDR, a Vanguard, or whatever, and eat off of 7%, 5%, 15%, 13% on an annual basis. And there's no commission fees. And there's no commission fees. Like if only our people realize that, how this stuff works like that, maybe. But that's why y'all here, right? That's why we all here, because we got to go back out there and share that, right? In the proper way, right? So yeah, there's a lesson to be learned in terms of how to follow growth or the lack thereof through these different companies, because they're pretty much giving you an inside window of what looks like what, through their specific product, through their specific service, through their specific sector or industry. It's not a surprise why aluminum bauxite is kicking everybody in the teeth right now. Commodity. Aluminum is the most ubiquitous metal used on the entire planet. Would y'all agree with that? Or anybody want to push back against that? Anybody want to challenge that? Anybody wants to smoke with that? Anybody unsure why I make that
It
statement?
ain't gold. I thought it was gold.
You think we use more gold than aluminum on a daily basis?
Oh yeah, you got me on that. Yeah, we use more aluminum than anything.
It's a joke of putting on some jerk chicken right now, loading the grill up with aluminum foil. Man, you put down some gold foil on that grill, boy. That's gonna be some good. That jerk chicken that worth it, weight in gold for real.
That's tough, boy. That's tough.
It worth it, weight in gold for real. But that thing better be hitting right, boy. I'm telling you gonna shoot the seat up, boy. That thing. You look at him.
Yes, amen.
Okay. Most ubiquitous item on the planet is aluminum.
That's facts. Phones use them too.
Loaded in it. And in the inflationary environment where commodities are running through the roof right now, you get my point? That's why
Yes, sir.
price of aluminum is on a constant uptrend. And then you got to figure out who's the controlling interest of most of the aluminum on the planet. Who controls most of the aluminum on the planet right now? Shame to say it, but y'all probably know before I even say it. Who's the controlling interest of aluminum in America? In America, not America, but on the entire planet. Excuse me.
China.
Say it, ain't it?
Yep.
Now, are they digging up aluminum, iron ore, bauxite in Asia?
Nope.
They
In
digging it up in
Africa.
Jamaica too.
They're digging it up in what? In
Jamaica.
island nations, South America, Australia, everywhere except in their own backyard, because they ain't got it in their backyard. Notice that? How you don't got resources in your backyard, but you and everybody else's backyard digging up their stuff. All throughout Africa. See how that works? Boy, we better figure this stuff out, and we better figure this stuff out fast. You got jokers making entire power moves on policy over an entire nation's economy without their consent, because government feel like they can leg up, All right, I'm gonna leave that alone. That's a whole nother diatribe. We'll be all night. But you best believe in nothing else. Aluminum as a whole is what? A commodity that's just like oil right now, getting that bag, right? Because of, inflation, whatever. Well, there's other assets out there doing the same thing. All right, let's go to Trading View real quick. Let's go to aluminum futures, right? Let's look at the look, it's right here. Can y'all see my screen right now? Is it showing on Trading View? Can y'all see my screen real quick? Anybody?
Yeah, we do.
Is it?
Yeah. Yeah, you on Trading View over. Yeah.
Look, Mexico. Look at the Mexican trading futures, right? I mean, they got theirs. See, they got different ones, right? All this stuff, right?
Right.
And just like there's a lot of obviously aluminum coming out of Central South America, whatever, obviously, right?
Facts. Because it ain't.
Look at Arab aluminum. Look at the Arabs got aluminum. How the Arab got aluminum?
They're in Africa.
Bruh.
Saudi Arabia.
Right? National aluminum right there. Right. All this kind of stuff dealing with aluminum with a century. That's actual equity company there. Right. Yeah. Aluminum Corporation China Limited. Right. It's just case study. So it's purely case study, guys. But here we go. Aluminum futures, COMEX. That's the real one there. That's the futures of it right there. See, every time you see COMEX, you're dealing with the real deal.
Yep.
That's America Aluminum Futures, ALI, right? As you see there, right? The contract had different contracts in, contracts out, front run, different month values of those contracts, the whole nine. Right? I mean, that's next level stuff, but it's spotted per different scenarios like that. And this is showing you on the hourly scenario what that's look like. But just in this perspective, right? Let me put on the daily. Right. let me put this, and it's just spot stuff, right? Just spot value. That's why it looks like this. What do y'all see right here with these aluminum prices over the past, I don't know, let's say it bounced off the 200-day moving average here just recently at the end of 2021. And it's what? It went way back up here. So you basically bounced off 2,500 and you went way back up here to 3,100. That's almost 600 point move since the end of New Year. So a whole month and past in a couple of days, you went 600 points up. That's spot value and seeing how aluminum futures are trading right now. That's all commodity-based inflation on top of that. And the chart look like it's what? It's making a big U-shaped bottom, like you want to break out some more potentially. Look at that pattern. Rounded bottom, U-shaped patterns there. It peaked up here at one point, pulled back, tested 200 moving average. As you see clearly, bounced off of it and rolled on out again.
Get over here.
Right? On the equity side, well, how do you play this aluminum futures on the equity side and not have to deal with, feeling like you got this kind of stuff over here in the future? It's tons of aluminum companies you can pull up. This is case study stuff. This is purely a case study. I'm using this within context of tonight's discussion. Cyclical nature of what? Earnings and this, that, and third, right? It's all relevant. They're in an elongated cycle. Why? Because commodity prices are what? Through the roof. And this is the most ubiquitous used metal on the planet, right? It's aluminum, right? So they have what they call a run over, right? A run off or run over into other seasonal value because just by the necessity of commodity prices being up through inflation, they're constantly starting going to benefit even more off this cycle. Longer and longer. Look at Alcoa. Right? I talked about Alcoa recently. Say again, Eva?
I said they're gonna spray it right back down on us too. Aluminum.
Oh, yep. True story, right? True story, right? Some jigger probably didn't catch that too quick. You said, but true story. Yep, true story. It's definitely coming back down on top of you. All right. No, I mean, no cap there. No cap at all. She's 100% right. But look at this. COVID low, $5. Now sitting at 62.
Yep.
How many shares could y'all bought at $5?
A lot.
A whole bunch.
With an option on it.
Looks like a correlation.
Yeah.
Boy. And it's still in a quote unquote super cycle.
Super cycle.
It's in a super cycle. Dan Eyes, right? Oh, good old Dan Eyes. Well, Bush.
Yeah.
Right? Apple super cycle. Remember how long we did all them videos on Apple before they dropped their phone? All them super cycle stuff. Man, I had y'all so prepped on them super cycles, so y'all probably got tired of hearing me talk about that. But I was just prepping y'all for that. What everybody waiting on that new Apple phone to come out, right? They had been in a long cycle before they had dropped a new one, and that's why they call it super cycle, right? And then COVID just was like, and rain on their parade. But anyway, aluminum. Case study. Cycle value. They just had earnings recently here, as you see. I played it, made a little money into the earnings. It pulled back. It's just solid because at the top of the channel here, in this case, a little aggression band, right? Pulling back a little bit. You had a little spike up there. I cashed out. It pulled back, reconsolidated, and it started to make a U-shaped bottom again. It's all relevant. It's the point. Cyclical nature marks and the linear regression band is still showing what? More potential what? Upside. You see that angle there? All that there's just guidelines, training wheels, whatever you want to call it. That's basically what's going on here. It's understanding how that works. So I think somebody mentioned what? Options or leaps or something like that. I think I might have heard somebody say that. I could have been wrong, but I think I heard that.
Yep. I wish I'd have got that.
Look right here. See, we back test money by what? Observing other money. Ain't that something? You get to back test money if it's these people about that life and not by seeing, people putting their money where their mouth at. See, that's what I love about the market. You can't talk a good game here. You got to perform, right? You separate boys to men really quick or girls to ladies, and in the same breath. Look here. Let's go a year out into the future, right? Y'all like going into the future?
There you go.
Right, yeah. Y'all like the future. Do y'all? See, you like this, right? You want to go to the future? You want to go? Look, y'all want to see my face? Right? Clay Bisbee, y'all want to see my face? Come on, put that hood on. He'll explode everything, but y'all want to see my face? Black white supremacists, right? Look at that right there. Already into the future, right? January 2023. The stock price right now is sitting at what? 65, 64, 60, 62, $63. It went look, 76 cents after hour tonight. Yeah, additional 1.2%. She's joking be crying about 1.2%, 3%. And this stock put up what? A whole 7% today. A whole 7% today.
52 behind.
And it did it indiscriminately under the radar. And it's bullish. 7%. How many of y'all made 7% on y'all money sitting in your bank account today? Anybody? Go. Or that money you got sitting in your coffee cup or under the mattress or underneath your pit bull, dog house, underneath your pistols, all that. And that money gained 7% on it today?
Negative.
That loaf of bread, collect the mold, it ain't collect no interest on it.
No, sir.
Their next earning call is in April of this year. So.
Say again, over?
The next earning call is in April.
Yeah, they got one coming up. They just had one. They got another coming up, right? And we still in a super cycle of what? Aluminum, apparently. Because the commodities on the spot, aluminum is still going, showing up. We just went to aluminum future. What does it look like? It's ticking up still. Jerome Powell came.
When you pulled it up
fix
on my bad.
But,
when you pulled up aluminum on TradingView,
mm-hmm.
what category did you have it under? Because I'm trying to pull it up. It's not giving me nothing.
That was the aluminum futures, right? So you could do the futures through COMEX, or you could you'll find what they call an equity company, like a miner. They kind of like a miner, but they just like holding companies more so, right? And then you have the actual spot price. Spot price will be what they call the global commerce spot price that the world have to pay for a certain lot value of aluminum. Like we do gold, like that, we do palladium, rhodium, all this stuff, sterling silver. That's how you look at it through the futures market because it's the most accurate price that the global markets are paying for it. So in this case, let's say I put in aluminum, right? I start typing it, obviously it fit out for me, right? You see right here, I came down and so right, it just says ALI, right? That's the aluminum future of COMEX. So those are the standard. That's what they call the benchmark standard for aluminum futures, right? Because number one, we're in America, and a lot of our, the world's reserve currency is based on the dollar. So they try to, they spot it based upon us. Even though China controls all the aluminum, right? It should be through theirs, but whatever. We're not gonna complain. But you put in that and see if it's gonna have a drop down arrow. See that arrow right there? That'll give you certain contracts, certain dates of those aluminum futures values, right? If you just want to look at the current contract in front, so that's what they call a front value continuous. That means that's going to be the most current value of what? Of the front futures value of aluminum, right? It gets more intricate once you start getting down into, next contract, the following sequential months, because now you're using those months as a way to kind of front hedge, the futures of aluminum prices. So you can buy them in advance, so to speak. Right.
All right. Cool.
Click on the front one, and we can go over this stuff more because it's just in case study with the session tonight. But it's just showing you how to track this stuff, right? Track futures or track commodities. Right now, the easiest way to do it is go to investing.com. Y'all know it's my favorite website on the planet, obviously, right? Because it's a one-stop shop where I take everybody to. Right. If you're in training or learning stuff, I'm sending everybody to investing.com because it has everything you need for free. But I have to pay a subscription service, right? So you come on here. Investing.com, see right here, you hit the markets tab, right. See what we come down where it says commodities. This right here has all your commodities. See right there. Now it's aluminum gonna fall underneath what? Energy, grains, salts, meats, commodity indices. What is aluminum gonna fall underneath? What subheading does aluminum fall underneath? Anybody?
Commodity.
Metals.
Right, is the aluminum metal or is it wood? Y'all know what it is. It falls underneath metals, right? We click on metals. Look at the top one up there is what? Well, that's because the alphabetical order. Right? But no, clearly aluminum, and it's up right now. 56 what? 56 points, 1.88%, banging out the hours. Or banging right now is not even after hours because it's future. That means it run 24/7, right? Could make this up. It's the only thing that's up that more than probably what nickel. And we know why nickel is up, because nickel is up because what? What is nickel used for? Anybody? What do you use a lot of nickel for?
That has the actual metal in it, nickel too.
Right. What else can you use nickel for? Excuse me. Bathroom fixtures, all kind of stuff, right? Nickel, very useful, ubiquitous metal. Right? Very ubiquitous. I mean, that's the only two metals that's up like that. Ain't that something?
That's a fun fact right there. I didn't know that. That's a fun fact. Get excited.
See? Juice, right? This is stuff, y'all be so I keep telling y'all, you're gonna learn so much about the world as an investor in passing than you could have got sitting in university. True story. You learn how the world operates when you become an investor. Why? Because you're dealing with only two things and two things only, a product or a service. And you're trying to what? Reverse engineer how both of those things are what? Magical in their own right in terms of what people are willing to spend money on or what they're not willing to spend money on. Separate. I mean, it's a whole new different level. Trust me, it's a whole new different level. It is. You sitting down schooling, people in executive boards that only deal with certain things, you giving them a whole rundown about everything. How you know all this stuff? SEC files public information from the publicly traded companies, and yeah. Yeah. At those moments a lot. And people like, man, they're like, man, I need to quit my day job. Like, don't do it. Because you still need a lot. It takes a lot of work, a lot of research. You'll get there, but you're just doing the stuff in passing, a lot of it. But you'll get there. Because you all deal with this stuff one way or the other. So again, aluminum, not hard to see right here. Right? Not hard to see why metals are up on average more so because of what? Commodity prices are going through the roof. So that same COMEX future that we were just seeing over there on Trading View, you come back, you see what it looked like over here. Of course, if you want to come look at it on investing.com, spot price, that's spot price right there. That's spot price right there. Right? All your data, your pre-recorded data forward and backwards looking, right? 25 tons that you see contract size per lot value. Right? All this tick stuff, all this, next level when you get deep into understanding how that stuff works. Look right here. Articles down here telling you all about what? Aluminum price that can't keep up with energy costs. Driving wave of what? Closures, right? Jokers need aluminum bad. Aluminum can't answer jet fuel, right? Inflation dominates U.S. corporate earnings, right? Kaiser Aluminum declared sentence. These companies dealing with they up to their dividend, they making money hand over fist on aluminum, right? Again, case study, guys. Clearly, case study. Right? The contract, you can come pull up a lot of contracts on well, you had to go to COMEX. I forgot because you're not gonna put up on the regular contracts like that. So you have to go to the commodity tab. Come on, man. My computer been lagging and logging up all day. All right, you come down on the commodity tabs on bar chart. Right, this you got said metals, palladium. Hold up, what that? Feature that. It's been a minute since I came over here and looked this stuff on bar chart. Let's see, where you at, buddy? I know they got it up here. Or they may have taken it off. Who knows? It's been a minute since I came over here looking for it. So, because it will fall underneath what ALI is saying when you saw it on Trading View. So let's see. Interesting. All right. Well, I guess they may not have it on bar. They may have it on the premium server. Who knows? Because that high grade copper, of course, that's interesting because it's definitely futures. All right. Now I'm curious, right? I'm curious. I'm gonna look for that thing. Like, oh, it's supposed to be up here. All right. Oh yeah. High grade gold, platinum. Where you at, Lou? So they may not have it on here. They may not have it on bar chart. That is, of course. Of course, and these are your softs. I know we're following the soft. It's a very pliable metal. Anyway, but again, investing.com definitely. You come check it. You can go check it on TradingView, whatever. But case study again, aluminum. Cyclical values, run on terms of the service. I mean, the cycle of it, because it's commodity value. Catch right now. It's gonna do its thing until they rein it back in. Same when you're looking at when we're talking about lumber. Right, lumber, shot through the roof, pull back, and shooting back up again. Same thing with natural gas right now, or natural gas. Why is natural gas up right now? Where my Texas family at?
Yeah, ice storm, snow, east, west, down to Texas. Here I am.
See? Him and over Chris, y'all right in that area. So just the scare of that storm ain't even hit y'all yet, right? It ain't even hit y'all yet. So why is natural gas futures are surging right now? Because they front loading it. With inflation and they front loading it in the same breath. That's not rocket science.
And look at that dump. Look at that dump.
See? And now it's starting to what? Round the bottom.
Back up.
Oh, and this storm just happened to be what? The excuse. See how the market work?
That's crazy.
Wall Street don't have no
gonna
chill.
last a day and a half.
At most, right? You ain't seen not a hard stitch of freeze or nothing yet, but Wall Street don't care. Like, bro, we front loading, we front running, we just in case.
Man, it's literally, they said it was supposed to ice and all that stuff. Man, I mean the temperature dropped.
Yeah.
But it ain't even do nothing, man. Just a little cold rain and it ain't even icy like that. It'd be paranoid. Now Dallas getting smacked.
Yeah, we are.
For sure.
We are.
Right. Well, they kind of in a unique geographical location. You know what I'm saying?
Right.
All that had to do with demographic or geographical, I should say. But all that because what happened last time when it hit and nobody was prepared, apparently, right? They're like, where my Atlanta people at? Anybody on here from Atlanta or live in Atlanta?
Yeah, I live in Atlanta, bro.
Atlanta got that black ice, right? Them jokers shut down 285 the perimeter black ice, and it'd be petty. It's like, but you come live up in the north, like DC, Maryland, Connecticut, place like that, man. You like, bruh, really?
Yeah, I used to live in New York. I'm originally from Jamaica, but I used to live in New York, and
you know the difference already.
So yeah, they panic when they come and
they shut down the entire perimeter for a little black ice and a little snow. But just be out there skiing.
The tissue, the food, everything, bro.
They ain't built for it, right? So it's just weird how that stuff, but they always over promise and under deliver. Of course, that's America. That's been the American way for since time immemorial. So ain't nothing new. But that's how the game works. So again, you got to look at this spike. Look at that spike on natural gas. It's about 381 all the way up to $6 and 20 some odd cent. See right there? Commodity futures there in that regard. From the 26, basically the 20th to the 26th. Big gap, big parabolic move. Pull back, solid. Now you present yourself with higher lows. Until they ride this gravity train to us, the wheels fall off, then they off it. Then it'll go back to being, like this kind of stuff here. That's Wall Street.
Fact.
So that's cyclical nature of markets in itself in terms of use case. It's all relevant. Earnings, use case, special one-off events. Look, it's not for us to sit there and park whether we know it to be, 100% accurate or 100%. It's definitely legit, even though it seems like it's weird. But we're just, playing into the game of chess the same way they play a game of chess. We're following the money. Right? We use these little cycles, and natty gas always picks up at around this time of year. Not rocket science. Y'all don't believe me? Anybody want to test it? Anybody want to test it tonight?
Let's test it.
I bet you a tropical smoothie gift card. Anybody want? Make sure it's the avocado, right? I need the avocado one in my life. Anybody want to bet tonight? Anybody want to bet? Look at him.
I bet you a Seymour smoothie.
All day air, they dynamic 3D, or I can get the kitchen Bentley. Y'all, look at him. We can get it. We can get it.
Yeah.
Right.
For the sake of let's say, let's prove it.
Case in point. 2021, beginning of the year. See right here. Pull back.
Yeah, that dip. Yep.
Right. Well, obviously it was a succession because it looks bigger than that because it went way, into that, January aspect there. Over here, right? Let's hold up. Let me see. Right here, right? So that's 2. Where we at? Okay. Where we at? Let me get it here, I guess. Here, you just kind of went sideways. So this was 2020, right?
Right.
What was the weather like in the beginning of 2020? Because all this stuff is still relevant to what? To the season, right?
Mm-hmm.
So it wasn't a massive cold freeze coming into 2021. Oh, excuse me, 2020 for some reason, apparently, right? Natural gas, less use. You had a small curl up. You tried, right? They tried here. See right there? It's minuscule. They tried there to look at that bump up. After that, out of there. The same with these other ones, right? At the beginning of the year. Here is just more profound, right? Definitely, right? We had, somewhat of a cold. They benefit from it. And guess what? What happened with Texas last year? Ted Cruz was on his way to San Pedro. Y'all was over there freezing your gonads off, right? Stuck.
Big freeze.
Right? Big freeze hit Texas. Big freeze. When that freeze happened last year?
Mid-February.
Right around February, right in January, mid-February, somewhere around there. So as soon as it began to be aired apparent that it was going down, right, they start front running in what? Natty gas futures. Right here. See, it peaked up here near $3. Came from around about what, 2.4. Now these are small nominal moves that it makes, but when it makes them, it makes this what it breaks out, then it's gone. Right? Because you ain't using natural gas during the middle of summertime on average. Not like that. You heat no houses. So no big deal. And then the back end, then it broke out because this breakout here in natural gas came on the back end of what? What was this breakout here based upon here from basically March 2021 all the way up to what? Essentially what September of 2021. What was that big breakout? What caused the breakout right here in natural gas? Anybody? You're gonna get a sticker. You get this right. Right? I get you with the sticker.
COVID.
Well, to a degree, but okay, now put it in the context as an executive person, right? If you're looking at the broader global markets as a whole, you've been hearing stuff in passing on news, this, that, the third, what's happening or affecting the average American right now. What's affecting the average American right now?
A lot of them were inside of their homes, so they were utilizing whatever. Yeah,
to a degree,
air conditions to an extent, but
I'm going a little deeper. I'm really finna dig into the ideal of the global, what's affecting everybody globally right now. Right? That's in this. We're not going to say strictly. We're not going to focus strictly on natural gas use, but it benefits as a byproduct of this major economic, headwind that's hitting everybody. But it benefits this commodity. What's hitting everybody right now on a global level? What's hitting their pocketbooks? I should give you a couple other little
Inflation.
Clues. Say it again.
Inflation.
And got him.
They got us.
So as soon as inflation becomes a hit, the marquee problem that everybody got to deal with, what now benefits from that? Anything that's a commodity, instantly what? Goes up in price because of the supply issue, also supply demand, right?
Right.
Instantly sends everything to the roof. That's a commodity base. We can back test this by what? Going through all the different commodities, for the most part, seeing which ones, how they really benefited, from now. They people get charged literally what they want. Shaming themselves, right? This is how they get you. This is how they joke just sit around and make all this money all day, every day. And joke be like, yeah, but about that stuff, man. I don't know if I don't know. I'm like, bro, come on, man. Come on. Right? That's why oil going through the roof right now. They already know oil going to what? Oil is already going to how much a barrel? Y'all already going to say it at this point. Y'all already know how much oil going to?
$100.
Over 100. right? If they say the benchmark is 100, that means it's actually going what? Over 100. Because at that point, that's just that's just the ledge, right? Then you got to go off the ledge. You got a base jump at that point. That's when Wall Street get that extra, like, oh, we got them now. We got the bears on the. We hit our benchmark. They scared now. They finna start covering. Let's get an extra 20 points off of them. Let's take it to what 120, right, or 110 or one. Wall Street has no chill.
Now the Ukraine situation won't that affect it as well to our gas, oil? I mean, that pipeline over there.
Well, you know, especially that, and then not only that, you know, war in itself. Y'all, especially that, Sister Monica, y'all know anybody y'all know in the military, y'all know most nations go to war for what? Anytime you don't know, anytime a nation going to war anyway, it's already finna destabilize what? A lot of commodity prices, preferably oil, because it takes a lot to mechanize and move a what? A military. It takes a lot of fossil fuel to move a military. True story. So it's kind of like it get baked in, it get priced in. And that's on both sides. That's not just your little tanks and BB guns. They got to what, Brady? They still got to get fueled and all that too. Hey, both of y'all bet the gas point together. You know, I'm gonna be shooting at you in the next couple hours. You know that, right? Yeah, I know. Let me get this gas real quick though. Ain't no gas in that tank. Ain't no gas in that tank. I'm out of here, bro. That's how this stuff works. Okay, so inflation kick everybody in the teeth or instant benefit? Instant beneficiary. Instant. Look at this here. Guys, y'all was right here when we saw oil go into the surplus. Y'all remember that when oil went it crashed and it went into the deposit, it went into the negative. They were basically paying you money to take the oil off their hand. They had so much in reserve. They were giving, I think, on the COMEX barrel, we went down to negative. I think it was like negative. I want to say, God, was like -6, something like that. It was somewhere. We can go pull it up. We ain't got to talk. We ain't got to guess. Why am I sitting there going through this here? Let's go. we wrote a song about like here it go. We show you, baby. We can tell you. Let's go to that 5-year chart right here. It's right here. Was it that? Well, yep. It was during COVID. We went under. Now this is just spot Brent oil, so this is not the COMEX. COMEX one is the real one that tells you this. But I'm just showing you how Brent at that point, you know, Brent got down here, right? So we typically measure our stuff in America by WTI, right? Brent is more Europe and all that stuff, and the other stuff they make the byproducts of Brent oil. Refinement oil comes through WTI. So let's go to WTI. But then COMEX was the one that with the contract, because that's when you actually take ownership of a barrel of oil. If you trade COMEX oil futures, if your contract expires or exercises without you closing out before that, guess what's going to happen? What's going to happen to your residence? What's going to show up at your house?
Barrels.
Sir, we got this 55-gallon barrel of crude oil. Like, where you want this at? Tied up in the backyard in the pit bull. Y'all know how that stuff go. Tied up in the backyard. Just put it back in the backyard in that pit bull. So you back there making your own gas. True story. That's COMEX futures, though, of course, in that regard. All right, but WTI, of course, is one that we watch, in that regard. But it's the same reality, right? See right there, negative. It went negative. What?
$37.12.
Oh, my bad. Let me go to that one. It went negative. What? Y'all see that?
$32.71.
Look at the low. Look at the low. Look at the negative. It went negative. What?
Negative $40.32.
That means they were paying people to come take the barrels of oil off their hand. They paid you a dividend essentially to come take the oil off their hand. And y'all wasn't there backing y'all trucks up to get some of them barrels. How y'all gonna let they give away oil? Y'all now all of a sudden y'all crying about paying gas prices. Y'all could have had barrels of oil in the backyard. barrels of it. Could make this stuff up. That's like when you get what we call like a net credit when you do options. You sell premium. They pay you in advance for the particular aspect of the position. Obviously, if you're holding shares to kind of as collateral in case somebody exercise, but they pay you in advance. You get a net credit. That's how the COMEX barrels or contracts were at that point when oil dumped like that. That big dump. This stuff is crazy. And ever since then, what has happened? Rocketed. Where you at, Sister Monica? You buying a lot of that diamond energy, fame, right? $5 or $6 a share. That stuff went to rocketing right back up. I mean, Larry about to tear them little contracts back up. And then now you're sitting up here at $90 a barrel. Imagine if you bought futures contracts down here when it was at negative and you bought them leaps in advance, like 2 or 3 years leaps in advance. How much that thing be worth today? You'll be retiring somewhere.
For real.
You'd be straight retiring somewhere right now. Like, bruh, yeah, that only took me every bit of what? Under 2 years. It ain't even March yet. That's when the COVID lows happened in March. Here you is in February, you'd have been, it's up here at 90. It's at 90. You know, we were looking at it at $6 and stuff like that. We was having conversations about it. We were going up, so we got the videos. We were politicking about this stuff at 6, even though we were there politicking at -40 and all that. It was crazy. But we was like, okay, yeah. You know, price of oil, because remember I told y'all this, right? Because this ain't my word, this is just how the metric work. How much does it cost? How much does a barrel of oil have to be? A 55-gallon oil barrel of drum has to be profitable. I mean, a company that's, you know, distributing or whatever. How much does that barrel of oil have to be? I actually went over this several times with the guys too.
I think it's over 100.
A little less. Like, we ain't got 100 here and there, but the price of barrel of oil where you can run a profitable business in oil, you have to be able to mark your barrel spot price your oil or your barrel of oil at a certain price.
Like 50? 50?
Right now. 100%. Who said that? Overdate? 50
You know what it is.
50 bucks puts you in a profitable business in oil.
I'm in the lab now. I'm locked all the way in. I was driving all that time.
Oh, see, I had to get it right. See, let them marinate. I mean, y'all remember when Trump was pushing back on the oil barons and the Saudi Arabians? That's why they kept sending his little nephew Jared, whatever, son-in-law, the deal with the Saudis and all that stuff. What is Trump telling? Hey, we need barrel oil around how much? $50 a barrel. That's why the gas price was cheap on Trump in that respect, because they was actually working. They was politicking with them oil barons. True story. He said, I don't need oil no more than 50 bucks. Oh no, anything more than 50, 55, that's problematic. His word is not mine. We were right there watching it though, and some people just, it didn't register. But and then income, all this other stuff, and then inflation and printing money, then Joe Biden, he like he just don't know what to do. So their greatest weapon is either you're going to have to start tapering right away, cut the money print off, or you're going to have to start a what? Y'all know I'm going with this, right? They're going to kind of start a war. They have to go on, pass the blame off on, and then after it's all said and done, then it'll crash. And then it'll be like, okay, that was our reset. Old playbook. All right, let me move on for that, because you're going to come from my channel in a minute and move on. Move on, brother. Cut that stuff off. Cut them lights off. But so, again, that's how you track that stuff. Again, all this stuff is cyclical in that nature. That's the same way gold breaking out right now. Why? Because y'all know why. We've had that conversation several times. It's in the cyclical nature, same way. This is earning cycles also for these companies, or not companies, excuse me, these metals. They're not tied to any individual company unless they're a miner or a junior miner, something like that. But the spot prices dictate what's going on around the world, because these are universal, numbers, right? Aggregate values of what the world is paying for an ounce of gold, right? Universal ounce of gold is what, $1,800 an ounce. That's universal. Now it gets marked up from the different, purveyors, but that's the spot price. When you say spot, that's what you talk about. That's the spot price. That way you never can, be misinformed in terms of what you're paying for an ounce of gold before they hit you with that tax on it. Same way with interest with banks, right? Treasury Department have interest rates on a 30-year, fixed note sitting at maybe about 1.91821. But by the time the banks get it or your mortgage lender get it, they add on an additional percentage point. They ain't a 1.5. And then they hit you with, but your credit as well. So we have to add on an additional, risk factor. But man, the national average is 1.3. Man, let me get that house at 1.3, bro. Y'all get it. But That's how this stuff works. All right. So, but anyway, you can track a lot of this stuff. You can keep up with what's going on in the cyclical nature of how this stuff works. Just following a lot of the most basic things in terms of commodities, certain industries, certain sectors when they're kind of having their heyday. We just witnessed that again in terms of again, a big consumer powerhouse like an Amazon in that regard. A lot of this stuff is just kind of right in their wheelhouse. Again, that big EPS beat is just phenomenal because I got to dig through that some more. That's just a 615%. Something happened. They either bought back some shares because that's the only way. That's another way how you beat earnings per share. If you do a buyback, that actually gets calculated in terms of your earnings per share. Because that money has to go through the books, right? Because it gets absorbed back into the as a form of income value. But that could have been it. I had to go dig, but that's just one of the tricks Wall Street used to beat earnings per share. They'll buy back shares. When they're weak, they buy back a lot of shares, right? As if they ain't got money to CapEx spend with and all this other stuff. But anyway, long story short. But that's it. So
wasn't there some suicide bombing incident? Was it Syria just now?
No, it was an actual military strike.
I know.
Military joint strike.
In the news, like in part of that article, it said something about suicide bombing, and it's like, how could that be? Like,
No, that was good old fashioned American going to somebody else's house, kicking their door in and murking the joker.
Yeah, so when you talk about that W word, that just reminds me of something that's a precursor to that.
Yeah. I know how these jokers play over here, right? Ain't no making no mistake about it, right? And they did that to old Bin Laden, right? Same thing. Kick a joker door in. He was in there eating his little, he was eating some hummus or chilling, and man, look,
What a bad one.
Does that get over?
So he caught a bad one.
Boy, did he? I mean, they televised, put the man business all out there. But that was a weird one. But yeah, y'all know we definitely go in on them conversations. But yeah, so this is again, this is your market, guys. This is your opportunity on drugs, right? Essentially, right? Again, no short of opportunity here. It's about realizing how to again, play chess, not checkers, how to compartmentalize this information, how to utilize it properly, how to use cycles as another way to kind of make an investment thesis, right? I mean, is that making sense now? See, as they say, right, or as I kind of stated in this, right, that's why you plan ahead to get ahead, right? I repeat, plan ahead to get ahead. We was taught that even as, children, right? Now, as investors, guess what? You have to now utilize that strategy. That strategy or that thesis to your advantage. Why? Because you're using money as the vehicle, right? As the vehicle to get from A to B, to potentially C to D to whatever. Make sense? The lead work is all up here. I repeat, the lead work is all up here. Natural knowledge and applicable knowledge that you gain through these different confines, checking these little websites, checking these little traps we call them, right? Checking the trout. That's why I always tell people, we do good in this stuff because we have the best, we have the best example value that we use to help us make this stuff make sense, right? Our analogies, our example. Again, you just dumb this stuff down in layman terms in a way that you can teach a kid this stuff. It's a true story, but we are teaching kids stuff. You can't teach kids stuff, right? So I always say, what's our excuse? You got all the experience. You've been paying bills. You've bought houses, bought cars. You've been, been in debt, been out of debt. You got all the experience in the world, but when it comes to applying it, joke like, oh, bro, that's too much. Let me go get the second job. I'm straight. Right, I'm gonna get this third job. Why would you want to do that? But whatever. So we're learning. We're getting better. We're getting proficient. All this stuff is relevant. Use it. Utilize it. Right. One day, I'm not even pause it that way. Let me say it this way. We'll do another structured show because I think it's a good time to do it at the beginning of the year. We've done it before. Well, we're just gonna go over again all these publications again. Right. These are good places to kind of set traps to place you want to peruse to get more information about what's going on. Of course, we just went over Earnings Whisper. We went through investing.com. Of course, Investopedia is definitely the Bible of all things in dealing with investing or financial literacy as a whole. You go to Investopedia. Investopedia has everything, pictures, diagrams, all that, right? It's loaded, comic books, the whole nine dang there. But that's what it's all about. TradingView course, it's free site. Right? All this stuff I'm using is free service. Mind y'all, I don't pay for no more services no more. The only thing I pay for now is Black Box. Right? I used to pay for all this stuff. Like yearly, I learned how to fish. I use all the free stuff now. Right? That's the whole point. Right? So that's what we're trying to do. We're trying to teach people how to save so they can have money, to use to invest with. We're not trying to, charge you $1,000 for, this, that, third. Again, no shots fired to nobody that does that stuff. But again, I believe in the aspect of really setting people up for success. Your entry level dictate how well you doing this based upon you, not feeling like a person got to commit you through it by paying a whole lot of money where they can force you to want to learn it, right? Because if it don't work out, you're definitely gonna blame somebody because you just gave away a whole lot of money. Here, you ain't crying about, $20-$30, whatever. I mean, it's just not even worth even thinking about it because the level of information that's been passed out, that we give out, that we share is priceless. Because we have a very unorthodox way that we go about our training, that we open your mind up into looking at the world from a businessman or a businesswoman perspective, first and foremost. And then we get into the minutia of technical analysis, charts, candles, patterns. You first got to start thinking like a business person first. If not, you're going to make them same lazy decisions that we was making before we got this knowledge. We think it's so what? Checkers and not chess. Binary, emotional moves. No, that's not how money works. Money has to have direction or purpose. That's what you're here for. You guys are the ones that are going to direct it. You're going to nope, here. And it's okay if you take an L every now and then. Why? Because show me 100%, win rate business person. Show me one, right? One. Right. The road to success does not go in a beeline. I'm sorry. I've yet to see somebody go straight beeline unless you got air money. Somebody left your bag. Then you can blow that because you don't know what to do with it. But yeah, the road to success it's a lot of winding. But it's best to make sure that you stay on the as we say, the least path of resistance, right? The least path of resistance to help you get there. That that saves you a whole lot of flesh. It saves you a ton of flesh, right?
Path of least resistance.
The path of least resistance. One of my favorite sayings in quotes, because that's the whole purpose within this too, is to help people unpack this stuff, save you the headache from trying to figure it out the hard way, right? That's what it's supposed to be about. That community diversity aspect of it. Well, yeah, Miss Shaniqua, I see them popped in here late. We got to put open up that. She probably got the babies with her right now. Yeah, Miss Path of Least Resistance. Now, that's your new nickname. That's your little t-shirt moment. Path of Least Resistance. You're going to get on that path.
What?
Get you on that path of least resistance. I see you popped all in here. But yeah,
what does that mean?
Now, they see how you coming in, acting up already. Now, doggone well what a path of least resistance means. See, already trying to cut up. What Oprah Brandon at? You lucky Oprah Brandon on here. I'm Oprah Brandon. Get her. But yeah. But everything we've been talking about, again, we're talking about universal values of being able to measure, market, and gauge money, right? Through seasons, through cycles, the same way. Of course, you're in the business of as we say, a sage in that regard. And people go through cycles in life. Right? People always say, you old school, like especially church folk, they say, this is my season, right? Y'all know what they're saying when they say this their season, right? Or they out of season or in season. Well, I go a step further. You can be in season constantly if you figure out how to utilize everything to your advantage, the elements, information, money, opportunity. You just got to know how to move strategically, right? Don't limit your scope of understanding how money works and money moves, because every day somebody's making money, every day, and somebody's losing some money. So it's best that you're on the winning side more than the losing side, right? So this is what this is all about. It's a preparatory course of understanding how to utilize your natural intellect to figure out how to find money. And we just use these little financial assets to do so. That's all we doing. That's all we doing. Your win rate, again, has to be over at least minimum. Well, standard is 51%. Now that makes sense. You got to be 51% win rate to be a positive, what they call a profitable trader. 51%. Kind of lackluster, right? You think about it, right? Man, I only need 51%. Yeah. But of course, getting to that point where you can get to 60, all that, it will come based upon you being able to follow the rules of engagement, utilize the markets properly. It'll happen. But take your time. But the market ain't going nowhere. It is not going anywhere, guys. Right? And you just getting all the information in advance. So when you have to utilize it or put it to work, guess what? You already know what you're doing. Oh, I remember this. I remember that. I know what this means. I know what that's about. Okay, yep, I'm ready. That's the whole point of this, right? The studying and the going over the stuff over and over and over and over and over again until you get tired of it, and then you know how to what? You know how to work it once it's time to work it. That's what it's all about. Repetition becomes repertoire. Repetition becomes repertoire. Right? Get used to doing it over and over. Get excited about doing it. Because it's only money. It's only money, right? It's only money. Makes sense? So that's where we at. Again, utilizing the ideal of earnings are just one way to gauge it. And I think it's the most, for me, I think it's the most easiest environments to gauge how stuff works, because you get a chance to see what they're doing. Again, it's like quarterly report card, same way we was in school, right? Your performance level. From one semester to the next or whatever, one quarter to the next quarter, it's just a performance guide. And you get to measure that company up against what the global economic market looks like at that moment. Not just, other players in the space, but the geopolitical stuff, the policies that affect these companies, whatever, the one-off events that may also be a headwind in a COVID environment. You get a chance to measure all that stuff and then make your executive decision based upon, what's going to be good for you in that moment. So to me, I love it. I love it. I love this stuff for that reason. Right? It's just keeping you sharp. It's keeping y'all like sharp like steel. Right. So don't run from it, run to it is my point. All right. So that's it, guys. I ain't really got nothing else outside of that. I really want to lay a little framework of that understanding of that thought, because what we're witnessing here in this particular earnings cycle is going to be the prerequisite of what's going to come with the quantitative tightening that's getting ready to happen. Of course, they're going to be done by March. Their words, not ours. They say they're going to be done by March. That means that $120 billion is going bye-bye. Don't think that market just going to crater right out the gate because of that. Why? Because we talked about what's also holding the markets up. What's also holding the market up? All the what we talked about earlier.
Balance sheet.
That balance sheet. How much is that Fed balance sheet?
Trillion.
About what? How many bricks that is on the black market? bricks. Do
you know?
Somebody says that's a whole lot of brick. That's what we know it is. Go ahead. Right. Somebody, I think you were about to say something about.
Me?
Oh, that was no. Go ahead. You were about to say something.
Okay. Well, I will. I know. I'm gonna take my time with it. But just being curious because it was mentioned. Your face. I'm sorry. Future though, the way you look like you better not. What you about to say?
Oh no, I'm over looking at the screen now. I got to pull up the chart too. I'm over here. Oh, go ahead. No, go ahead. Go ahead.
Okay. The future when you're trading futures, I'm looking at it here on the internet, and it says that you have to have a brokerage account and be approved. So, how much do you need to have in a brokerage account? And that's what you meant by having to trade at least 50% outright. Like, is that without error and stuff?
Oh, no, I would use that futures market as a case study to kind of gauge commodity prices. So it wasn't necessarily, and that's to say, well, you need to be out there trading futures, right? Because that comes with applied knowledge, right? So again, you don't never want to put a cart before the horse, right? So futures is another way to saying, you just trade the market in 24/7 perspective of how money is being moved, right? Globally, not just in your demographic. That's why they call it the futures market, right? Because, what's going on in China right now may be relevant, for their time frame with their access to market, right? Or, the aluminum prices are being fluctuated because now their market is online. They buying so much metric tons of aluminum, right? That's just a gauge, right, that we talked about in the ideal of how we map money or map opportunity by way of inflation, because the commodity prices are going up, right? And you can trade them, of course, you definitely can, but that's definitely what application, right? That means knowledge, right? What to do, how to do it, this, that, the third, right? What is a futures contract? How is it mechanically access, right, through your brokerage account, of course. To have futures trading, matter of fact, futures trading privilege, you want to call it that. Of course, number one, you have to have an option contract that options brokerage account that offers that. In most cases, of course, you're not going to definitely not. They don't have that on Webull or they don't have it on Webull. I don't think. You need a more mainstream brokerage for futures, and you got to know what you're doing, right? Because that's a whole different world. That's a whole different ballgame. Right. So, but of course, if a person is interested in learning futures, no problem, right? It's an endless, trail, paper and video value that can help you understand it. Because the same is like doing options to a degree, right? But you're dealing with, spot value contracts like the COMEX one I was talking about, like the price of barrel or whatever, right? You're dealing with those things, and you have to have a certain value of money in your account to be able to deal with the fact that if you exercise that contract or you mess around and get something happening, you move away from your computer and you coming up on the expiration date, they're gonna be calling you saying, hey man, where you want this this bushel of oatmeal at? Right? where you want this where you want this cow at, right? We got these little 10 cows that you bought the contract, where you want them at? Time in the backyard, right? Or whatever, right? You can't, you don't want to mess around if you let definitely, on that side. So that's why we tell people about the equity holdings or the miners or the ancillary companies that within those spaces too. But of course, that's just application. When you know better, you do better. You know what to do is my point. But that's all that is. That's just another form of options trading, in a sense, that how it's set up in that regard with the contract. But you have to have certain value money in your account and a brokerage account to handle the futures.
Okay. So if you okay, no, that's not the ask. What I want to ask was when you're option trading and you see in the put, right? If you buy a put, let's say the stock said that it was at $25.99 and you believed it was going to go down, so you went and bought a put for $24, right? I mean, you bought a put that you believe was going to fall to 24, so you bought the 24 put. Mm-hmm. Why does it say above, like it could go above on a put to $30, $40? Isn't put when you go down? So why do they have higher values when you buying puts?
That means you're buying at a different strike price. That means if you're buying in the money, deep in the money, what they call in the money, at the money, in the money, or deep in the money, that means you're buying extra levels of protection to have intrinsic value, the whole weight of your contract into that expiration date. Now, I know that's going to sound like a whole lot, right? Mm-hmm. Now, within that whole kind of, block of information I just gave you, basically in layman terms, that means that you're kind of putting an extra layer of insurance value or protection on that contract, your money, by buying it at a higher strike price as opposed to a more lesser for it to come down to it, to hold the value potentially of your money when it's being dealt with volatility, theta decay that eats into your intrinsic value with people buying in and out of that contract, because you got to think about options as like it's like a pool, right? Mm-hmm. Or if you ever played Biz Wiz back in the days, right? You get like a pot, right? They call it a kitty. And everybody kind of pulling from that kitty, right? Or that pot, right? Mm-hmm. If you have less money in that kitty in the pot, that means, it's not a lot to dole out in terms of mm-hmm. intrinsic value. It's a finite value. It's finite anyway, but it's not a lot where you can feed off of. But if you have more irons in the fire, that means you have more potential to make more more money, right? To pull more resources from that opportunity. So that's essentially how that works in layman terms. So when you hear about flow charts and you hear people saying, well, this much money is sitting in the open interest and how that affects the IV, the implied volatility, what implied volatility is going up because a lot of people loading up in certain strike prices over others. So that makes that stock very volatile at or around that strike price. And so market makers have a goal and one goal only. This called delta hedging. They're trying to do everything to keep people from realizing those strike price goals if they can, because they don't have to take ownership of all those different shares. If people exercise them, that means they have to have shares to give these people, right? Because that's what you do when you exercise a contract. That means you now went from being a contract owner of this derivative saying I'm test drive it. Now I actually want to own these 100 shares, right? Someone has to be able to deliver them shares to you. Either somebody on the other end, which is another person that's trading the anti side of your trade, meaning if you got calls, they got puts at that same strike price, right? Or if they sell it, in most cases, it's people who sell in premium, right? I should have said it that way. When you sell in premium, that means you guys actually have to own these shares, just in case somebody chooses to want to exercise them. And in most cases, it's always going to be like the market maker, because they're the ones controlling most of the movement throughout the day. They got the bigger bang, bigger buck. They got most of these shares already in escrow. So they have to do what they call delta hedging to keep the markets balanced as much as possible. That way you don't have this, one side tip the scale on one side and then it get out of control. And then you have a stock, that moves up 20, 30 points when necessarily it won't move that in the day. That's when you have parabolic moves like a GameStop. What happened with them? AMC, what happened with them when they broke out, right? What happened with a lot of the latest stocks that just broke out is, not nights ago because they ain't got no earning options yet, but any stock that makes a parabolic move bigger than expected, that's because, again, if they got options, the premium got away from the market makers, right? Because they call it like a squeeze or like a gamma squeeze. I went over gamma squeeze before, of course, you wasn't here, but you might have was here for one of those gamma squeeze conversations. But all this stuff right here, again, is just, layers and layers of options trading information that comes along with what, if you have a hankering for one of the trade options, you got to start at the very, very, very beginning of how this stuff works. What is the option? What are the different strategies that you could, implement through options, right? There's a put, there's a call, right? One of them is a long bias, one of them is a short. Then you got the different strategies. You got strangles, straddles, iron condors, butterflies. You got legs. You got leaps. You got all this stuff, and then you go into what the Greek ratios, the ratio, right? Ratio spreads, counter spreads, call put spreads, debit spreads. Then you go into what? The Greeks. The Greeks determine pretty much like an equalizer. It determines you the leveling of people coming in and out of those contracts, causing this thing to have greater intrinsic value or less intrinsic value, right? Time value, right? That's why it's called a contract. A contract typically gives you a window of time, right? Before that project is to be terminated, expire, or you need to add more time to it. That's what they call a rollover. You add more, you buy it again for a future value. You add more money to it to keep that contract open because you didn't complete whatever you needed, right, to get in the project. So it's a lot of different layers to it, right? But you got to start from a base case of understanding some of the most fundamental criteria of what options are. You get your education based upon going through what they call, how I say like, it's like training wheels, right? You got to know what, again, number one, where you're going to be riding your bike. If you need training wheels, what's the use case in having the training wheels and all this stuff that makes them, great for the experience, right? That's what's going to, lead you into other aspects of knowing what to do in terms of how options work. So that's why we always start out teaching people how to equity invest first. Why? Because derivatives come on the back end of understanding how markets work on technical fundamentals and investor sentiment. It relates to options once you realize the value. Now you're just saying, okay, if I buy equity outright through a common share, that means I'm actually taking an equity stake in this company. I get a CUSIP number after, what is it? I think it's like 10 days. You're now considered to be, 7 or 10 days? It's been a minute since I went over this. Like after 7, 10 days, you get what they actually call a CUSIP number, meaning you are a founded equity holder in this company, right? And so you get proxy voting rights and all this stuff like that. You get to read all the filings, they'll send you stuff in the mail, like, you know, because you attach to it like a social security number for a stock. That's basically what it is. In the options world, you get what? You get the contract, you get the test drive before you buy it, right? And it could be a vehicle to obviously to make money off of through, you know, like the stuff we've been talking about tonight, like earnings and just you know, utilizing it as a money vehicle, right? Or as what is made for. Options were really made for one thing and one thing only. What was it made for? They were actually made out of necessity to hedge the markets. To keep, when markets go against you for any kind of black swan event or bad event, if you bought the inverse, you know, aspect to that asset through the value of the derivative, you can now counteract your stock going down. You make money on the flip side of hedging against it, right? So that way you don't lose all your money. At least you got some money you're making on the back end to kind of what dollar cost average in on that asset on a much later price when it's what it's at a what, you know, pullback or discount. So it's basically a hedging technique that has now become more mainstream for what income generating too, because the fact that you get what more for less. They're giving you 100 shares of implied value for what a singular point of value, right? You're getting 100 shares for one, basically. Make sense? So it's concentrated value based upon you saying, I think this asset has the ability to move this amount during this certain time. If that happens, guess what? I have the ability to exercise the contract and take ownership of that strike price if I bought in the money or deep in the money. That's what goes into that. Say, for instance, if you want to get short a stock and the stock is sitting at $25 a share, but you want to get short at it at 30 because you think it has more downside to come, that means you're going to spend a little extra to be, you know, to be in a position to take ownership of shares of 100 shares short at $30, right? So what's 100 times 30?
I'm sorry. 100 times 33,000.
How much is it?
3,000.
So it'll cost you $3,000, right?
Mm-hmm.
To take ownership of 100 shares short of a company if you feel like the stock going to obviously come down a lot lower, right? At some point, right? And you want to sit on those 100 shares because you think, you know, for whatever reason, the company might have had some bad, you know, news, the company going through something. That just gives you a higher perch point to what the short into all that new potential what premium that's going to come from the stock coming down, right? You do the same thing if you buy what at the money, right?
Mm-hmm. Go ahead.
What? No.
Go ahead.
That's just saying it depends on what you have in terms of money to offer, right? In terms of a risk profile, right? But the same way that you're trying to plan a proper stock to hedge against it, you can turn around and lose that same amount too, right? That's the risk in trading of what options. So again, I got to say all that because again, back tires got to catch you on the short bus here, right? Onto my let all the back tires catch you because you jumped out that window, and you got to know these things if you're gonna jump out in the option side. Because guess what? That responsibility is on who if you jump out the window.
Me.
Right? There's nobody's responsibility because knowledge brings power and power equals profit. So we want to make sure that these things become like, you know, kind of etched in stone in a lot of ways because you're going to have time to do those things at a much proficient level once you get a lot of the preparatory knowledge. Now, notice I said the preparatory knowledge. I didn't say you have to get, you know, prep, what they call college prep and all this stuff. I just said preparatory knowledge. So that just basically means what? The basics, right? The basic guidelines, right? Mm-hmm. What is the option? What are the different strategies? What are the different, strategy? Let's go strategy. What are the Greeks? You know, the ideal of what? Implied, extrinsic. You know, all this stuff, volume, moneyness, all this open interest stuff. You have to learn all that before you even think about jumping out the window. Now you can get lucky, but you can never be consistent, right? Mm-hmm. Because that will put you in a position where if you know what to do in terms of how, the structure works, what I'm saying, right? How to, to get into the options, how to get out of the option, what are the different, like when you open up your brokerage account, you see all these different strikes, like you just talking about, well, why would I want to buy put at 35 when the stock price is at 30? Why don't I just buy in the money or a lot less because it's going to be cheaper if I buy the 24 strike price as opposed to the 30 strike. And now I just got to hope that the stock come down, right? Because if it come down, that means I'm still going to make money. Intrinsically, you will if the premium is good, meaning there's enough buyers there and you have enough time, right? Because you make money into your strike price. You don't make money at the strike price. You can start making money right into that strike price if it's coming down towards it. You can start making money, right? You start accruing interest, right, in that contract, right? However, that's not a strategy you want to bank on. Why? Because if you don't understand the totality of how that works, eventually you'll get get too confident. You start buying contracts on what they call 0 days to expiration, or they call it 0 DTE, right? It's a t-shirt going on with that now. People didn't got excited about that. Trading kind of like in the gambles mode, right? Not that you probably know anything what I'm talking about with that, but you'll think you could buy it the same way you buy equity stock, or I could just buy it anytime. Even though you may have, it still says that you have missed this many days before the contract expires. But if you're not even thinking about, how many people also bought that same strike price too, that could be a problem because you have a liquidity shortage. If you and a few other people only buying the contract and not a lot of people sitting in that actual potential strike price, it may be hard for you to even get out that contract because the spread will open up on you so much, and then market makers will sit there and trap you in that until somebody want to take seize of that contract that you want. And they'll just eat your premium up. And your money just like, man, where my money went, right? Because you don't have a lot of buyers for that contract, right? Now, this is next level of stuff, right? You only get this through the option training, right? This right here is not ubiquitous, just natural stuff. But, we talk about everything here. But again, I'm using this as a way to say, of course, in this regard, this is how this stuff works. And if any of that was kind of like, okay, that seems like I need to kind of, dig a little bit to get understand how it works, then that means you should not be what? You should not be doing it.
You should not be doing it.
But like you going to the gas station and one pump says kerosene, one said diesel, and one said what? Regular gas. And you in your mind, it's all gas. You pull up at the kerosene pump. Let me get 30 on 16. Like, well, we have a 16 pump. Where you get my 16? It's the kerosene pump. You
that
put
was me.
$30 in kerosene in your whip and went halfway down the street and the tank then fell out the back.
That was me when I had my my Land Rover. That was me.
True story. Look at that. True story.
They was like, what are you doing, ma'am?
See? So that's why knowledge what? Knowledge what? It pre to that of what? The profit. You can never have proper profit without having proper what?
Knowledge.
Right. So you can't, it's knowledge brings power, you can profit, but the same thing, because power comes from conviction. That means you know what you're doing. You have power when you got knowledge, right? Because you can make better decisions. Right. Not rocket science. You're not going to skip to the profit without having proper knowledge to give you the conviction to have the power to make this kind of decision, executive decision, which will equate to you having the ability to make the profit from it, right? So that's why we want to, what we always tell people, that's why we stress what? Proper education first, above all things, because anybody can do what they call a signal service. And that's what I don't do. Of course, y'all know I don't do signal service. Why? Because that's fool's gold. That's just where I come from. It's not to slight anybody else way of training or doing their stuff. But I think that'll set people up for failure a lot more so, because you're going to need specific people who are really intelligent, high IQs to pick this stuff up instantly and run off a signal service. They got to really do a lot of back end work to make sure they cover their behind too. Why? Because they'll realize eventually that it was working this way for the last 3 days, but on that fourth day, it all went to crap. The crap hit the fan that day. They panicked, deer in the headlight, everything went wild, their head blew up, they didn't know what they was doing, they panicked, and they lost more money on that fourth day than they did on those first 3 days of Will of Luck. See how that worked? The markets will punish you.
That have to meet the verse.
Punish you.
With the stock that I put up in the group.
It will teach you.
Lost, and I sold it, and then it went right down. So I would have gained everything back, but I said, let me cut it out.
But see,
and yeah.
If woulda coulda was a strategy, we all be millionaires. We'll be billionaires. Or as they say in the military, if was a fifth, we'd all be drunk. And right now, everybody on here very sober right now. We very sober. I think.
Very much. Oh, snap.
But that's why knowledge predates, right? Power, right? So Don't get ahead of the system, or as we say, that's that's the preliminary aspect of how you're gonna become good at this, right? Because once you realize that the competition is not about how fast you can feel like you can prove to somebody you can do it, but more so how consistent you can do it. Because that's what's gonna preserve your capital. Again, this is a one-man operating industry. That's why I love it. And it's a proving ground. It's gonna separate those who saying they're doing something as opposed to those who proving it. Why? Because your results are gonna be exemplary of whether you know what you're doing or not. Either you're gonna make money or you're gonna be telling people you make money. But then they say, well, let me see what you did. Well, I don't know if I'm. They're like, okay, yeah, you just talking and you fluff, right? You fluff, right? You capping. So that's why I love it, because it's a performance-based value where the point to prove this to anyone goes out the window. It's just you and your world, your time, your knowledge, your money, your opportunity, just like it is for Warren Buffett who's sitting around looking at the same stock that you may be looking at the same time, right? Or Charlie Munger or Dolly or these people, right? These got billions of dollars. You have that same opportunity in that regard. That's what should be attractive to it, number one. But if you say that's the case and you're excited about that, then why would you want to short yourself? You literally doing the same. You short selling yourself. Like I used to say that back in the day. Don't short sell yourself. Don't short yourself. Don't put a put on you. You put a put on yourself, right? You're like, oh, dog, you trying to bring yourself down, huh? You trying to short yourself, bring your worth down, your value down. But that's what you do when you put a put on yourself. Because that would be what? A lack of what? Know-how, right? Because you would say something going wrong here. That's why this needs to come down, right? You shorten your knowledge, right? Yeah, oh man, I don't know. I'm just short myself. Right? So that's why we say don't short yourself. Right? It's not worth it. Right? Get all the information you need. Know what to do, how to do it. Get into those know-how videos. Go to those pages and teach about the brokerage app and this, that, third. If that's the case. But at least you feel more convicted when you make that executive decision with your money, as opposed to feeling like you're guessing. Because the worst thing can happen is in the middle of a trade and you stress, and then you pull somebody else into it, and they probably might be trying to focus on getting paid, and not everybody like, look, I got a trap house over here open too now. I got I got a trap house open over here too. I'm trying to get it now. I got and so it's just, again, be patient with the ideal of it. Let it unfold. It's gonna unfold and reveal itself in a way where you'll have more respect, for it when you get the proper information and knowledge, right? Because then it's like, oh, but after Jack nigga, how they say, where did they get a hold of me? Where did they get a hold of me? That's how you want to be in this. Eventually, of course, you'll get there, because your interest level is high. And that's the prerequisite to being good at this, right? You have to have the interest to want to learn. And that's what's going to force you to want to read, listen, audiobooks, books, study groups, on and on and on and on and on. Because you're just back testing information between other think tanks, other people. Still sharp and steel, right? We're going over information. Say when you see people post stuff all day in the group, what are they doing? They essentially doing what? Laying a data trail. That's all it is, a data trail. This information about this, that, and third, whether it's actionable or not, that would be determined upon the individual investor, right? The thing we spoke about tonight, we're dealing with earnings, right? Well, how important are earnings to a marketplace? It's a quarterly report card on how well these so-called great companies are doing or not doing, and what are the effects that may be affecting them. Make sense? Right? If it's inflation, if it's economic policies, if it's war, famine, floods, food this, whatever it is, right? Supply chain issue, at least you get first-hand information to be able to utilize that stuff, because it's public information. That's what makes this great, because people they can cook the books, but they can't really hide information from you as an investor, right? That's the whole point. You go to work for somebody, they can hide information from y'all all day, every day. We ain't really hitting our production goals like we want to, and then they might be undershooting, the scenario and making all this money on the top side, and that's going straight to the CEO pocket. Got people thinking we on the verge of going under as a business, right? See that? Again, that's cool. That's the world that most people have to deal with every day. Here, you are jumping right into executive board member seat. Day one, you buy a share of a stock.
And when
you already considering, especially if it's voting rights attached to that share, right? So a lot to learn in that, of course, but that's why you at the what? The starting block. And there ain't nothing wrong being at the starting block. And there ain't nothing wrong watching people, post about opportunity and make a little money. You ain't gotta feel like you gotta go out there and prove it. Why? Because if you solely make that decision based on the fact that you want to prove that you can do it to yourself, but you want to share it with the family, and you feel like, okay, well, there's still a lot of stuff I don't know what to do, but again, I'll figure my way out as I go. Some people learn that way, but in this industry, you don't want to bank on that because this is real money. This is real money.
Oh, I know what I'm.
I already told y'all 2 things to get people in their feelings is what? Money and love, and both of them require the most attention. At the end of the day, if you want to have either or. So why not, no need to short yourself in that perspective, right? If you really want what you want, because if not, you're going to waste a lot of both trying to, maintain both by doing it the hard way, right? It just, to me, it's just not even worth it. Because again, I'm like, convince me how the stock market finna shut down. You finna miss out on all this opportunity coming because you ready to jump out the road right now. That's a simple thesis, right? Convince me how you missing out.
I don't want to answer that.
Right? You ain't missing out. You ain't missing nothing. So the pressure should be moot to you. You should get excited. This is me talking, of course, in this regard. You should get excited for the value of, okay, let me make sure I know what I'm doing. Not, because you're a fast learner, obviously, right? Obviously a fast learner. However, there's a lot of steps that's still out there. So again, that's like you going from, going to, driver's ed, they put your little Toyota Prius, something you got to drive around a little camp, that little 2-cylinder, learn it right. You coming out like, let me get that Bugatti with, with the paddle shifters, right? With the air brakes and the fusion reacting in the back. You like, yeah, put me under that steering wheel. And, you might herk and jerk off the front line and get going, but at some point you can be on somebody's bridge somewhere. Eventually you're gonna go to somebody's bridge and your little wheels gonna be all up in the trees. Hey, what happened to the car? She ran up about an oak tree, something. It ain't even worth it. Right? So keep it simple, right? That's a saying that people say in the market. Keep it simple, Simon, or keep it simple, stupid. That's military too. But basically, essentially, that means that the market, you'll hear people say stuff like the market is not what? Rocket science. It really isn't. Yeah. But also, in the same breath, they're going to also tell you that what? It's not an exact science. That means you can't mathematically your way through this alone. On A plus B equals this. That's not how the markets work. You're dealing with emotions. And the 2 things I told you about, money and people and love. That's 2 things that cause people panic more than anything. That's why those are prerequisite. You got to get those things right first, right? And then you move into a technical aspect, and then you can move into a more sound fundamental perspective. Make sense?
Yeah, very much.
Well, you said that, but you said that last time. And then you jump right on out that window. You jump right on the hot air balloon last time. Okay. And you stressed yourself out and stressed jokers out. They're like, hey, you didn't get in trouble for this last time. Why you did it again?
No, for real. I'm sorry, brother. That's funny. They was like, sister, wait, I think I got some time for you. I'm gonna message you now. They was at their jobs trying to help me. I was like, but wait a minute.
So now you gotta start thinking about everybody else because it will be unfair. It will be unfair. Because they trying to study, they trying to learn, they might got a couple dollars, but again, everybody has a respective time and place in this, and that's okay. But again, that's why we always come through this stuff in this manner. The way that we do stuff, we make it make sense in layman terms, so you don't have to struggle to learn it, because it's about, again, the least path of resistance. Because again, there's people out there that charge $1,000 for this information. Thousands. And they ain't even sitting there. You coming in with all that. Well, maybe let me. They gonna be like, are you serious? Next, get out of my face, right? And they got people willing to pay that too. Now, again, we don't pocket watch anybody. but I can guarantee you, pound for pound, the information that we go over and the way that we do it, we make this stuff so applicable and pliable to your situation that it's like it's crazy. It's crazy. It's about the breadcrumb pieces of it, though. Anybody could jump right out there and say, okay, you go. Again, but it does require the people have to have the IQ to be able to deal with all this information because you're learning how to multitask. You're running the online business. You're watching and managing money on a minute level and even a large scale. However, but you got to be able to be focused, intent, all these things that require for a good executive to be who they are. That's why they became the CEO for a reason, because they built for this. Well, you're doing the same thing for your money. I don't care if it's $100, 50, 5, 1,000, 10 racks, $1 million. It should all matter to you because it's what is your money. It's yours. Okay.
Okay. Well, I'm gonna ask that last. When you mentioned gamma, would you say gamma could be an indication? A gamma squeeze could be an indication.
It's volatility. It's volatility at a strike price back. I'm just using the layman term because again, this is how you finna get you some good information. You remember? You ain't gonna remember. Even though I not dropped it while you was in the group, but I gotta say it anyway. But I dropped the whole video about what option Greeks several times, and I dropped PDFs on Greeks too. But again, you know how this stuff goes. People, again, this stuff is about interest level. If your interest level ain't understanding what's going on, you ain't gonna know what to do, what you're dealing with when it comes. But that's why we do it, consistently. We just always putting information out as we can periodically to keep people refreshed.
My interest level is there.
But guess what? Interest level, that's just one of the ingredients. Now you need proper perspective. Again, matter of fact, Oba David in here, right? I don't know if he might have been going Dynamic 3D, right? We came from international marketing. We used to have this saying a lot of times. You say, especially I used to say a lot with a lot of guys. Like I say, what's most important? A sense of urgency or a sense of purpose? And you would say what? Why would you say that?
Because I believe that whatever you do, you should know the purpose or you should be doing.
In layman terms, give me a layman terms definition of what I mean by that.
You either have a reason or you don't, or don't do it.
You have direction.
That.
What is urgency? A chicken with his head cut off. You got all the urgency, but you ain't got no direction. You're doomed. So purpose, perspective, and direction. It's simple as that. Keep it simple. The more you put simple terminology and rules on your learning, the easier it is going to be for you to ingest this stuff. I guarantee it. Because the market's already giving you the blueprint every day. Every day it's giving you a blueprint. News, catalyst, technical stuff. These people fighting, these analysts upgrade, all this, whatever. It's giving you all this stuff every single day. You have endless opportunity to get through all that stuff. It's what you do with it is going to determine whether or not you're able to apply it properly. Meaning how well you interpret it, so to speak, right? Because you've already gone through a level of understanding and training and figuring out what this is, what that is, how this works, right? Because there's two layers to this, right? It's the mechanics and it's the what? It's like an operating system, right? Or a computer, right? You have what they call two layers of what snare. You got software and you got what?
Hardware.
Right? And the first level of troubleshooting at any problem of a computer or some kind of form of a technology like that, what's the first thing you check? The hardware or the software?
You check the hardware.
Exactly. Right. Plug, stuff like that, right? And then you start going into the what? The programming and all that stuff. So in this case, the mechanics gonna be what? The hardware or the software?
The mechanics are gonna be the hardware.
So if you can't get in and out of a trade,
stop it, Oba. Oh. Okay. All right.
You troubleshooting from the back of the house as opposed to the front of the house.
There's a good reason for that, though.
It is not.
Okay.
It is not because in this industry, you either gonna lose a lot of money and learn the hard way, or you gonna what?
I don't want to learn the hard way, so I'm gonna stop. I don't want to learn the hard way.
That's only up to you. I can never tell you what you can and can't do. It's just up for me to provide proper
guidance.
That's what this is all about. Because
that's crazy. Because that's the same thing I say when I do what I do. It's just, I'm just here to provide guidance.
Because somebody is trying to also gain this in the same like this that you are. But everybody's at different levels. That's why I always tell people, everybody has different levels at this, because they time and their money are the two things that keep them, respected to their lane, right? Mm-hmm. Everybody's just different. Some people have synonymous paths than that, but everybody is not the same. So you have to tailor make this to your time and your money. It ain't rocket science. It is not.
That's my oldest. No, it's not. I wanted to know when I asked the gamma about the gamma, because
so I'm finna do right, because again, you're putting software before hardware.
No, I was asking, just being curious, because it said that the market gamma could be used as a predictive measure of S&P 500 price distribution.
So do you know how to interpret that in terms of using that for the option contract mechanically?
Let me see. Market gamma can be used. So the markets, right? The information that you receive from the markets can be used as a predictive, meaning you're assuming you really don't know, measure of S&P 500 price distribution. The model is based on the options open interest in the major equity indices. The data is downloaded and calculated each night to produce actionable trading levels. In layman's, I think I just read that from the market's gamma, and referring to gamma squeeze, if it started to go, if they started to do poorly, then they would use that as a predictive measure on the S&P 500 price distribution, like what they were going to put out, and make a model on that based upon the options open interest. Now, the options open interest, that open interest part, I'm not too defined with that, what that means, and the majority equity indices. So how much you could get or not get, what you could assume you would get or not get. Is that right? Or I'm lost?
You see my screen right here? You see my screen at the moment?
Let me see.
It's still sharing. Bar chart, is it showing bar chart?
Yes, I see bar chart. I'm going there with you.
Long bias or short bias?
You want AMC?
Yeah, I'm just throwing that out there. Are you just pick a side, long bias or short bias? Long or short? Put
long. Long.
See right here? See at the top I put what? Show all. These are the strike prices associated with this expiring contract, right? So this contract expires tomorrow at February the 4th, right? The highest contract that you can buy is what on the long side is what?
The highest contract you could buy is from the bottom here, 60. Is that 60?
You see that open interest right there? That's open interest right there. How much is that open interest?
$12,201.
See there, it says volume. That means how many contracts are bought today. As you see, the definition right there when you hover over, right? That means 103 contracts were bought today at that strike price. How much did it cost for that?
0.01.
Which is what? What's 0.01 times 100?
100.
No,
No,
0.01
no,
times 100.
no, that's
You know this math.
how much?
I said you know this math. We went through this already.
I know, right?
What's 0.01 times 100? And we got to get through this because you know I got to go. I got to eat. I got to eat. I got to get my carrot wrap. Gotta get my little smoothie. What 0.01 times 100?
Huh? Okay, that is one.
See, why you doing that?
$10.
Again, that would be working hard and not working smart. You're running an online business. Do you have time to do that? Now, it's good to test your math skill, but that's what you have your calculator for. Time and money, man. The market ain't gonna wait on you. It's not. You run an online business. You losing money. Your customers fleeing. They're like, this ain't organized. You got all they do this here. Ma'am, that's what we invented calculators for. You just open, you did a grand opening doing a grand closing next day. Grand opening, grand closing. Like, God dog, we just opened the business. God dang, what happened? Organization, multitasking. Move that swift IQ. You're too intelligent. If a person throw something out there, leave it. Oh, let me calculate. Oh, that's blah, blah, blah. Not rocket science. If you're on the computer, you got a calculator. You still be struggling. You're losing money. Again, we went through this with you before. You're losing money. See all that time you're wasting right there? You're wasting valuable time.
It's $1.
It's a simple equation. 0.01 times 100.
$1.
So that contract costs how much?
Oh, $1.
See the IV? What does the IV measure? See that definition right there?
Implied volatility, the estimated volatility of the option strike over the period of the option.
It's sitting at almost 1,000 implied volatility. That means it's extra volatile. That means there's a lot of money sitting in it. But the probability of this hitting $60 a share at the price where it's at now, at what, $15 right now, is literally what? You would look at it like, this is kind of be like, if you had to do that on 942%, if you did that times 100, in that regard, it would be like what, 9 million to 1, something like that, some crazy number like that. That'd be the odds of you hitting that strike price. So that's a probability in your head. The likelihood is going to $60 would be that kind of level of what? Odds, right? Ratio of odd, right? If that was to happen, that would cause a what? The definition, which will send those stock through the what? Through the roof. It'll blow past that, and then it'll be what they call no walls, no ceiling, no nothing. It can go as high as the buyers would take it. At that point, you go with what they call a delta. It'd be like delta. What I forgot how they call it. They call it what's the thing they call? It's called like a layman term. It'd be like a delta. Your delta will spaz out. You eclipse 100 on the delta, which is nominal value of the base case. 100, you get 0 to 90, and it'll just spaz out. It'll be whatever the contracts are being bought at that point, but there's nobody holding contracts outside of that strike price, meaning nobody wrote contract for it. It could jump from 100 to 200 to 300. But you might sometimes you can have a delta up near 500, 600, 700 on the gamma squeeze. So that means like for every one like $1 move, you'll be making like $500, something like that, $500-$600 per every dollar in some cases. It's crazy, right? It's weird when you think about that happening, but that's kind of somewhat in the frame of how that would work in a gamma squeeze. So it's just odd basis. So gamma squeezes don't happen all the time. They only happen during the right conditions. Short interest, enough buyers, right? A technical, oversold scenario to put that stock in a great catalytic perspective, or a catalyst that kind of came to kind of perch that opportunity to happen. A lot of things have to align. A lot of things will have to align. Janet Jackson would have to give you a call. Michael Jackson would have left you in the wheel. You know about it. Prince left you his greatest 8-track hits, and Al Green left you a bag of money. You will have, but it's not unfathomable. Right? I know I'm just kind of making a joke, but you get me, because you just looked at the potential what? probability of this happening. Convince yourself, why would you buy that? First thing you would say, what? It only cost me a what? $1. That's a wasted dollar. Because you have to be able to literally merit the idea that this potential can what? Can go, even a fraction of that. It's at $15. The stock price is at 15 at the hour. It's at $15 now. That means they have to gain, roughly what? You know what I'm saying? It would have to gain roughly around about $45 a share. Or into that aspect of it, not necessarily have to hit it, but have to gain a substantial amount for that to happen. So,
and what I'm sorry. How did you get to that information? That's when you clicked on the
Ain't nothing I didn't. I just went to bar chart, put in the symbol that you see at the top, and then hit the options tab. I mean, well, in the side. I guess you didn't see that, but
you hit the options tab.
You hit the option tab, and then right underneath that, the one thing that again, I told you about the ancillary aspect of information you gotta learn. You gotta learn all this stuff right here. You gotta learn all this right here. Now you can learn this stuff later, because you could definitely learn options and learn the Greeks later, because you gotta get used to understanding how the mechanics work and understand intrinsic value as opposed to extrinsic value. Understand time horizon for a contract in terms of the decay. Those are some of the basic ones, but just you can learn that stuff later in option trading strategies or in training, option training, trading as a whole. But eventually, this stuff will become important to you. Why? Because once you start putting up what they call a hedge against your positions or your money, or for stocks, if you're just using it for the way to kind of capture short-term profits or like a day trade, this stuff becomes very vital. Because in this case, see right here, when we talked about buying in the money or deep in the money or at the money, the intrinsic value of that contract changes significantly at that point. You're saying I'm putting insurance on my money. The price right now is sitting at basically $15 a share, right? Theoretically value or whatever, on a contract that's expiring literally tomorrow, the delta on that is at 47 cents. You basically get 46 cents on your dollar if you buy that contract. That's how much theta is being dissolved in that case, because it's getting ready to expire tomorrow and people gonna sell out or go to zero on their contract. It's only worth 47 cents on the dollar. So if you bought $10 in the money, it's gonna cost you more. But see, the delta on that sits at 98. That means you have 98 cents on your dollar, but you're gonna need this stock to move tomorrow. You're gonna have to go up, right? 15, 10, 15, 30, whatever the price is, you got to go higher basically where it is in order to maintain that, because throughout the day, this going to go down, because you know why? These people here going to liquidate, they're 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 going to liquidate. That pool of money going to go from this big to what? To this big. It's going to be less than nothing before the time run out. That's theta. All this stuff working in tandem, the rho, the vega, the theta, gamma, all this stuff working in tandem to deal you a hand of intrinsic value of what your money worth. That's why we say this stuff becomes, you see why now, because you're dealing with derivatives. These are complex strategies. Guys, she wasn't here. She didn't see that movie we did, the documentary we did on what? On these. What's a derivative, right? What's a derivative? Well, a derivative is, it's a mathematical blah, 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 blah. Well, in layman terms, it's what Wall Street uses to what? Blah, blah, blah. But Jiggle like, bro, after all that, I don't even know what a derivative is. And he got a PhD for this stuff. True story. So the nature of this stuff is not for the faint of heart. You could be lucky more than you could be consistent. So understanding this stuff is a time creation process. You'll get it, but you have to have wherewithal. So you start at basics, right? Your first cue into this should be what? Let me go to YouTube. Let me put in basics of everything, right? You go right over here to YouTube, right? You can put in what? Like basic what? Options trading. See how the market is gonna force you to be and get you in trouble, because I always tell people, like, how you asking this question if you ain't did the research first?
Project option.
See what I'm saying? So
Mhm.
which one over Rich?
Project Option or Option Alpha.
Oh, well, like yeah, the different content creators, right? There's a lot of different
Yes.
ones out there.
Those
right?
are good.
Really good ones, right? And we got all these stuff in the group we posting, but even if you just kind of what they call it, research recon searching, look right here. See that one? It said basic option for beginners. Look here. Right? Complete beginner's guide. Right? Project finance guy. I know this guy, right? Been on it for a minute. He's sharp. Look at Skyview Trading, invested with Rose. Right? All these people they're giving you what they call beginners courses. Right? There's information in all of these people. Because number one, you can back test it, right? Some people just give it to you and explain it to you a little bit more in a more lucid fashion. You can learn it more, thoroughly, right? So, but yeah, it's a treasure trove of teaching you how to work. Option based. Like, how you skipping all that? Right? How you skipping all that? Right? You're not going to be consistent in this until you be patient enough to allow it to be consistent for you. That's how this stuff works. That's exactly how this stuff works. Because it's going to keep you in inquisitive mode. And again, then when you come into an environment where there's a training session, people can help you unpack it, right? But that's why we start at the layers of knowing the proper lane to understanding how to buy a loan, how to buy, not being short, but just how to buy a loan. Once you get used to that training wheel, you'll be more inquisitive about how to short at some point, which will also lead you into what? A more protective way to short the market is by what? Buying a what? A derivative. There we go. Now the puts become more what? A better liability. Because a naked short, which we do in regular shorting, it has unlimited loss. Unlimited loss. The first day you jump out there and hit short sale on a stock and you ain't understanding what's going on because you're like, let me test the little button, let me see what this is. And that market maker fuse your position, or they allowed you to do it, that brokers allowed you to do it because they feel like you had a little money in your account, enough to buy those shares. And you say, well, you say to yourself, well, the most I could lose if something happened in your mind is what? The amount you have in your account. And you test driving, and what happens is if that stock goes against you, if it skyrockets and you're trying to short it, let's say it runs and pull a damage on you in the real time, you have unlimited loss until the brokerage cut your account off. That means you might have to start with 5,000 and the stock went to running on you. And before you know it, you was down like 40,000. And then eventually the broker just cut your account. Because at that point, they like either the person fell asleep at the wheel, they must have had a cardiac arrest or something. Like how they sitting there watching money. But guess what? You don't get a do-over with that. There's no do-over. You owe that money. You owe that money to that brokerage.
But what if you haven't and you want it to go down and you believe it's gonna go up and you're willing to lose 50,000 because you know you're gonna get maybe 100?
You owe that money. It don't matter what scenario you put out there. They finna come get your kids, hide your wife. They coming for them. Because there's Social Security attached to it. Ain't no do-over. You can't escape it. Ain't no, I'm gonna dodge this tax bill. I'm gonna dodge this debt. Nope. No, they come to get you.
They have a certain amount that you're allowed to lose.
It's up to that broker. You don't get to even decide that.
For real?
Jump out the window. Knock yourself out. Don't do it. Yeah. Jump right on out there. You're like, well, ain't nobody seen such sneaky in social media lately, boy. They even confiscated your Facebook account. Like, dang it, bro. You're that much debt, but they even took your account down and everything. Like, no, she can't even talk to nobody because she poison right now. She gets somebody. We're looking forward to y'all see her, let us know. So this is the reality in this. So yeah, we do a lot of roundabout information to a lot of different things, and we tie it back to certain things. So as you see, I like to mix in a little bit of equity, options, fundamentals, technicals. So you're kind of getting it in the simplest. I'm not just start doing focus driven into it. But a lot of this stuff gonna come in times. That's why I say walk. Don't run, walk. Right? Let it happen naturally. Because of course, you can go on the binge and learn all this stuff on your own. Essentially, that's how I came up. But I had good people around me. I had people who were very skillful in these stuff, and I just pick their brains. When I say pick their brain, I mean if they had time to go live, like this time we using our Discord room, I sit right there and sponge it up. We'd be there again all night. Again, you heard about our stories, right? Oprah Brandon on here. Oba Chris been in them room. Oba Marquis been in them rooms. These people here been around. They know what I'm talking about. We been there. These people got corporate jobs in the morning. Like Mag. Mag's guy, Indian guy, he worked for Apple. Like Apple. He worked for Apple. Tim Cook. This joke in there, living in California, he in there 2, 3 a.m. in the morning. We in there breaking down options. These people got to get up and go to work tomorrow. They're making well over 6 figures. People from all walks of life. All that stuff don't matter though, because we all in there under the same auspice. Like, how can we use this opportunity, strategy, or this opportunity to better our situation, or to add some layers of income to our situation, right? So that was our commitment to one another. If people got the time to learn, we got we got some information to share, but it had to be on people's time, right? Obviously, because they give you something that they could be spent time with their family. They got this already. They ain't got to share this stuff with. But it was that kind of hunger, so we kind of was all, kind of happy. It's the same thing. That's why we started the group and all this. I ain't got to go through all that, but you get my point. What I'm saying. But everybody stayed within their confinements of saying, okay, look, we privileged to be able to get this information right now, right? We privileged that these jokers, dropping this game. And we just sit there and just, hours and hours of charts, hours and hours of information and data and live streams and whatever. But it requires that kind of level of interest. Not that you have to sit through all of it. Just everybody has to find their time in this. Right? But you still crawl based upon your appointed time, not, feeling like you got to keep up with the herd, right? It's going to happen. It's going to happen naturally, and you're going to receive it more, I should say, then, because you did it your way, right? You did it your way. That's complete ownership when you have that kind of mindset. Make sense? So no stress. Learn a lot of this little stuff from the back end, because again, obviously you have a liking for options trading. Obviously, you see that you can get a lot for less. You've been seeing us post our little games. You get FOMO'd in, fear of missing out. You jumping out the window, no parachute, no sneakers, no nothing. And it ain't gonna be pretty if you hit that concrete coming down 1,000 miles an hour. Right? Gravity gonna have its day. Trust me, it's not even worth it. It ain't even worth it. All right. So pace yourself. Get these mechanics. Don't again. As we have said, the first layer of troubleshooting is what? Hardware, mechanics. Learn the mechanics of that. Right? Don't get into a trade and feel like you can't get out, because the first time you stress somebody and they be like, well, what are you spazzing now? I can't even focus on my money. Right? And if they mess around and lose money trying to help you, what's gonna happen? They're gonna send you the bill. Don't even duck them. Don't even duck them. Don't even try to duck them.
No,
I've been making my money and here you in. Right? They made me jump out the window, no shoes, nothing. Right? So you got time, again, let this stuff become kind of like a law. So you'll spend a lot of time doing this, what I'm doing right now, because that's what I did. And that in my free time, I just I'm pouring through data. I'm pouring through data. That's how bad I want it. I'm just pouring through hours and hours of this, because I gave a lot of this time and hours to what? NBA, NFL, college football, trivia stuff, show. I gave these people a lot of my invaluable time just to be distracted. Just to be distracted. I'm like, oh, I got that and then something to give to this knowledge, because this is actionable intel I can use. Oh, I'm all in. That was my mindset, but that did me. That's how bad I wanted it. Right? So that's, everybody has to have their place in this. But again, above all things, I'm not going to lead you down a rabbit hole. No, okay, let's jump right out the window together. Let's go. Not a man nutter. Not a man nutter baby powder. It ain't finna happen, baby powder. Not finna happen. Right? Because that's just not, it's just not healthy. It's not healthy on your mind. It's not healthy on my mind. It's not healthy on your bank account. It's not going to be healthy on mine. Right. So let's do it. Let's kind of focus on doing it right. So options for beginners. You can go get the Greeks, right? You can get all this stuff for free 99. Right? See option Greeks, right? See option Greek, all this stuff right here. All option Greek. Right. You get fancy for for beginners, for dummies, I get all this stuff. You'll be here for days. Right? For days. And then eventually it'll begin to kind of make sense. And then we'll come on during transition. We'll kind of talk certain stuff. We help you unpack it. Then you're like, oh, that makes it even more sense now, because I saw it, I read it, I heard it. It makes sense now because we use analogous forward or analogy, whatever. That's all this stuff is about. It really is. Seriously, trading is just that. right? And that's why we always tell people what, find your own niche, but steal from everybody, like, wouldn't you? It's the only industry on the planet where you get paid for copying somebody else's paper. There's no plagiarism here. You can copy a person trade literally entry for exit, and there's no penalty for it. Matter of fact, you get praised for it in some cases. Think about that. Think about that. You can't do that nowhere else, right, on the planet in the industry without having to deal with liability, intellectual property. You can copy a joke trade. You can cheat, all that. See, people don't understand how. All right, let me go eat my carrot wrap. You can keep me here on that.
No,
Right?
my food over there cold as heck, sitting there.
See, look at you ain't even eating that. See, but again, start small, crawl, taking the information, the PDFs and stuff we got. I mean, we got so much stuff we've been dropping in that group for like so long. You can just go through the archives and just dig up stuff, and you'll be there like going through that stuff for days and days.
It was the last 2 PDFs you put that I really wanted to get my hands on. You shared it in both your chat and the one that
and the other
was writing.
So it was, I think it was risk. I think it was the risk one. Risk management. Risk. I think it was one like a risk profile, risk management something. I know it's one was dealing with risk because I'm always talking about risk. You see why? Yep. So definitely, that's probably why I posted over there too, because you're gonna jump out the window. So risk is important. That's why we always stress risk at every aspect, because that's what it is. This is a risk on environment. That's what they say. When risk on, that means you taking on inherent risk. That's when you hear that terminology, risk on, that means people are buying the market. When you hear them say risk off, that means they didn't want to deal with all that implied risk, because it can get real squirrely in the markets, right? And that's what's happening with volatility right now, because it's all over the place. Stocks are just bouncing, indexes are bouncing all over the place. A lot of people can't deal with that, and they like, I'm gonna sit on my hands. I'm sitting in cash until this thing slows down some. Right, that's the person's risk profile, risk tolerance, as they say. Right? They don't want to deal with all that risk, or that the little wasn't it rapid. They don't want them problems. They don't want them, right? Because that's gonna be a lot of money lost if they are not competent to deal with all that. All right, so there you go. You got again, every time we come on here, we trying to add a little extra, add a little extra layer, right? You got something to work with. It's not outside your ability to comprehend. Obviously, you're very, unique and fast learner in that regard, but you're going to have to put training wheels on this thing, right? You're going to have to, right? Because eventually, even if you have money to kind of test it like that, convince yourself how is that a more suitable value to just, to test to see if you can go to zero. Like, it's not worth it. You have plenty of time to go to zero, trust me. Plenty of times to go to zero, right? You got plenty of time to blow up some counts, blow up a couple counts along the way. And I learned my lesson. I gotta learn my lesson one way or the other. No. Plenty of time. Don't rush it. Right? Have you about a good $28,000 loss in a day, and then feel like you're comfortable and go to sleep at night.
Who lost 28,000
in a day trade? One day trade. Lose 28 grand in one day trade, then you get your mind right.
I wouldn't. Listen, you just gave me the experience by telling me that. Just because you just said that, I know it's possible. That's all I need. I'm not a knucklehead. I might be a little inquisitive. I like to learn for myself, but I'm not a knucklehead.
Don't jump out the window.
No, I'm not.
You jump out the window with a plastic bag from Walmart talking about this is a parachute. Good luck. Good luck. We ain't gonna hit that little plastic bag and blow holes all through it. You going to the ground hard like a rock. Don't do it.
No. So I'll leave $2 in my account on purpose, so I can't even make a trade. Nope. No, thank you.
So it's not even worth it. So prep.
That's over.
Makes sense. And then you got all these beautiful people right here that's online tonight, and in groups. And these people here, look, they selfless. Right? That's exactly why we have that information, that portal. Everybody just super selfless, right? So use it.
Yeah.
Use it. And they said, use it, lose it. That's it. So outside of that,
Thank
we
you.
ain't got Miss Leno taken care of because you got them the questions. So I gotta make sure hit everybody else. Know anybody else got any questions? Event information this evening before we get ready to log off. Anybody got any questions? Anybody? Anybody? Everybody's pretty. Anybody got any other questions before we log off? I guess everybody kind of go.
You gotta go eat.
Yeah, I gotta go eat. But I do it.
And I need to go study. I'm gonna go study.
Endless studying, right? I love that. Right. Good stuff, though. And we appreciate you as always, and we enjoy. Again, we enjoy this for a reason because again, it is a community university. This is everybody helping each other.
I like that.
I love that. Right.
Me too. Me too.
We got our own little think tank, and there's no pressure, right? We ain't no pressure on what we do over here. Ain't no competitors over here. We won't have none of that ignorance. Everybody homegrown, mature, and these people professional, corporate minded anyway, and it makes for an easier learning environment. Gotta love that.
Very appreciate it.
So that's it. So that's it, guys. Unless you guys got anything else of me before we get out of here. Of course, we're still doing the one-on-ones. I'm kind of getting them in as I go. And I got a lot of stuff going on too. So I think I got some openings tomorrow and I got openings Saturday. So of course, a lot of you guys, some of you guys have already got
What's your openings for tomorrow look like?
Yeah.
I have some after, I want to say probably between 12 and 3. I have some openings between 12 and 3 tomorrow. So, they all set in terms of 1 hour. For 1 hour.
That is crucial time.
Oh, you're on the grind? Oh, well,
that's the grind time.
But I have some on. Again, we're getting through everybody anyway. Because like I say, this is all about getting through everybody that's part of the service and that at some point. So we're gonna get to everybody at some point. We just got to get the time structure. But yeah, I put you down for 12. So you already kind of make a verbal commitment. So I know, but I put you down for 12. And we'll get your scenario. Of course, over Sean, you already know we got to do a consultation out the gate. So we got to get your whole goal package together. So I got you on that. Outside of that, the 101s just an hour assessment of what we've learned thus far. Right. We say it's a yearly assessment, but some of you guys just started, some of you guys been at it. Right. But the most part, I got a lot of people out the way early that was kind of, early on or whatever. So we're getting to it. We're getting everybody knocked out. All right. So I put you down for 12. And then again, I'll post in the group if anybody else got a slot within that, we'll add it, like we've been doing, impromptu or whatever if necessary. All right, so that's it, guys. So I'm gonna get off here. Guess you guys got anything else? That's pretty much the session for this evening. I hope you guys enjoyed it. Hope it was useful. That's the whole purpose of this, obviously. To make this stuff very, user friendly as much as possible. And we will see what the market does tomorrow. Right now, future markets are up, obviously because of Amazon, rightfully so. Seeing this kind of happening. Oil is banging up right now. Gold is up. Everything up on the commodity side. It seems like, so the markets are feeling happy right now. They drunk some moonshine tonight. All right, markets. Let's see if it holds. All right, so that's it, guys. So, we'll see you guys on the next one, guys. Peace, power, profit, everybody. As also, again, we did a video earlier today on earnings too. So it's small, but we did a little live on the YouTube channel. So if you missed it, if you just want to go see how we was looking at some of the earning plays, it's on there. Just go to my YouTube channel, whatever. All right, guys. So I'll see y'all in the next one, guys. Peace, power, and profit, everybody. My best to y'all. Stay safe, guys, and we'll see you guys back in the trap next Thursday.
Peace, power, and profit.
Peace, everybody. Peace, power, and profit, family. Good night, everybody.
Peace, power, and profit.
Peace, everybody. Good night.